Hello. Good morning, guys. How we doing? How's everyone going? A lot of you guys in here already. Good to see. Hang on. I gotta turn my camera so we can see me. I'm in the little conscription view here. We got Anastasiia coming in soon. She's a touch late, but she'll be here soon. Don't worry, guys. You'll have us both for today. How's everyone's Wednesday going? We will jump into markets in just a sec. How are we doing, guys? Hello. What's going on? Kavika already asking good or bad idea to trade CAD news. I would say trading news in general, probably a bad idea unless you've got a good handle on the, sort of macro fundamental, done the prior work for it. But yeah, trade the aftermath, Morning. How we doing, Richard? How we going? We'll get into some of this stuff. As you guys can see here, this was an L trade I just took just earlier. We were coming up on the Aussie dollar. I've actually re-entered in here, so we're back in once again. Whoops, we gotta move that down here. There we go. And we'll give a general rundown of all the majors in just a sec as well. But that's basically, you guys that always ask what am I in right now? That's what I'm in at the minute. I was in a euro-dollar trade just earlier, ended up jumping out of this once we started pitting out through here. So that's all I've taken this morning so far. So yeah. Morning, Nora. Once again. Hello again. How we going? El Saint saying going short New Zealand dollar pairs overnight. Best move of the week. Yeah, no doubt. New Zealand dollar has got absolutely smashed. We'll actually take a quick look at that right now. So we'll go NZD versus USD first. Obviously, we had the New Zealand Central Bank announcement today. They did keep rates on hold, but the tangential comments around that from the central bank were dovish. So that's why we've gotten absolutely ripped. So right now, today, New Zealand dollar, what are we down total at the minute? About 1.2%. So we've got obliterated on every single metric. Same with the New Zealand dollar as well. You see, deleted. So Aussie right up against the New Zealand dollar there too. So if you guys caught that, El Saint, mate, you'd be very, very happy man right there. Denman Gamehouse. Short Aussie dollar, New Zealand dollar. I mean, that's fair. We've had the rip already. It's a pretty extended move. So wouldn't be surprised if we do get a bit of a pullback, down to some of these, rounded levels. You just throw on a fib through there, get the 38, 50, 61.8% retracement. So if we do actually chuck that on there, right? First level, and that's just right at the top of the first impulsive bar after that news. You've got about 110.20 around there. So it's just at 19. I'd say 20 as your TP, just to make sure you actually get tapped in or tapped out, rather. Hit the TP on that. All right, let's go over dollar index. So yesterday, we'll start. Early Asia, we did have the pop higher on the dollar index. We came back down. We came and had another touch on this trend line that we've respected a couple of times and broke out of prior. Came back in, touched that. We've ran back up. We made a slight new high above the prior highs from, Friday, Thursday. So at the minute, it does look as though we are getting a general move back down in the dollar. So we can see, euro dollar has been drifting off for this week, Monday, Tuesday. So I wouldn't be surprised if we get just a corrective move. This is not necessarily just yet a substantive move higher. A lot of the market is still waiting for the comments from Jerome Powell coming out of Wyoming this week. And then obviously we got the Fed minutes tonight as well. So for me, that's technically tomorrow because it's about 4 a.m. for me for the Fed minutes to come out. But for the rest of you guys on the other side of the world, that's tonight, late tonight. So towards the end of New York. So keep an eye out for that as well. We've had the pound come higher. We did get the CPI coming in. So we've had that pop. And then the other interesting portion is that we've got US dollar collapse earlier. We've now had a drive back higher. So it'll be very interesting to see where we're going as far as the dollar component for today. I think we've got Anastasiia coming in the background.
Hey LJ, hey everyone. How are you doing here?
Going strong. Hang on, I gotta see if I can change the chart so it's not.
Can you say something? Okay.
No?
Yeah, now it's better. I think
Okay.
your microphone was
There we go.
not taking the music very well.
It might have been that, or because I went to studio mode for a second to just move the screen out of our faces, so it might have played up a bit. But welcome. How are we doing?
Okay, thank you. Good. What are we looking for today?
I don't know about you, but I mean, I know you were talking about last week not being so great. What do you think about this week? Because I've found it a bit mixed Monday, Tuesday so far.
Actually, I had great Monday and Tuesday. This week was amazing.
Oh, really?
It was amazing.
There you go.
So far, yeah.
Okay.
The last
All right, you'll have to.
2 weeks of August were not too good after the non-farm payrolls that came out, and then the whole thing with US and recalculation of it and rebalancing and so on. Now this week has finally come into some kind of clarity, but we do have the Jackson Hole Symposium coming in the next 2 days.
Indeed.
Which is usually the Friday, based on the previous years. Friday or second day of the Jackson's Hole is not too good for me. So I'm possibly not going to be trading on Friday. Now, today is still fine. I'm actually selling gold right now. It was in profit. It pulled back now, but I'm still holding it.
Still selling gold. So I assume you've sold around, the sort of tap into these prior areas through here, looking for sell down. Is that kind of the general logic?
Yeah, but I consider this as a high risk trade for me. It's not usually something that I take. It's more because I do see the volumes there. I did see the reaction, so I'm like, okay, I'm gonna take it, but I only took it on my high risk account because it's not usually something that I like to take as a main trade as well.
Yeah, look, gold, like we've talked about in the past, gold is still very much in that very awkward area. Not really giving much clear signal. It's very distorted. I'm pretty much just looking at gold on these like extremes, or the same thing how last night we had this bit of a channel. That was my freehand channel drawn out. Broke to the underside of that. We came up, retested it, and then came back down. So I did take a small gold trade on that last night from here. And then just took that down at the lows there. So
I was selling gold yesterday.
Yeah.
Just when you said the last night, it was night for you. It was
last night for me. For you guys, it's like the afternoon or whatever.
Yeah.
But So Euro, I got chopped up a bit last night, or your afternoon. Buying through this relative support here, I thought we would have sort of picked up, because Euro is very back and forth. Like we had a very mixed picture with the dollar last night. It was very confusing. Euro dollar coming off, but then also tapping back up constantly. Dollar yen off, then pulling back. Pound doing its own thing. Aussie dollar doing its own thing. Last night was definitely a bit of confusion and that sort of stuff. Same with we had the NASDAQ come off pretty heavily. That was due to Nvidia.
I was also selling NASDAQ and S&P yesterday.
Yeah, I caught a couple in between through this channel, and then once we got outside of that, I just ignored it because I was like, okay, this is getting, where are we gonna stop, where are we gonna end? But I definitely see.
But I entered too early on London session, so I got stopped out there. Well, I manually closed it because I realized I was too early for that. And then in the New York session, I took it with a small risk. So basically with those two trades, I covered it, ended up around break even. but then gold and S&P were quite good actually yesterday as well.
Yeah, brilliant. NASDAQ today, I would say we do get a bit of a retrace into the upside of that channel. So I think that's a fair shout for today. We'll go over the option stuff shortly. But do you want to show us some of your magical trades you've had this week then, since you've been rocketing off?
Yeah, sure thing. Wait, I'm gonna switch to my screen.
Oh, hang on. This is in studio mode. There we go.
Oh, for NASDAQ, I was basically selling it yesterday to the pullback here. So that's something I was waiting for since already Sunday. I was on the Sunday analyzing the market for the next week, for the next bias. So the reason I was looking for the short is because we did come pretty heavily back from the all-time highs. So we did renew the highs. But after a while, the price did chop down after the consolidation, left lots of volume above. We also had, if I'm going to close everything, so we also had the test of this area several times, and every time the price was coming lower and lower and lower. So for me, it's a price action sign that the sellers are pushing stronger to the downside. So the buyers level remain the same, but the sellers are coming closer and closer to actually push the price through. So I took the sell yesterday first here on this, here around this area. So, and then it went up, I closed it, and then I was waiting for the price to break through and then test it. So I was entering on this test here for NASDAQ and selling it lower, but I did exit it a little bit also too soon. I could have held it longer, but the reason I exited is because NASDAQ is not something that I usually trade. In between S&P and NASDAQ, I prefer S&P, so if I don't trade something quite often, I prefer to be very careful. So I was exiting in this consolidation area. If we get closer, we're going to see that the price did get a reaction here. So I was still waiting. I was still like, okay, maybe we're going to break through it. But after the price started closing higher, I closed NASDAQ right here. Where if I would hold it, obviously, it would go much further than that. No regrets though, because again, it's not something that I usually trade, so I consider that was quite a good trade for me, for NAS. Regarding today, we didn't reach the area that I'm still looking for the reversal. For me personally, I was looking into this area more, so I would still expect it to go slightly lower. And if buying it already from now, let's say it's not going to go there anymore, I would wait until the price breaks the current daily point of control at 23,416, which is right now, like it's from today. The price is rejecting it now several times already. So I would probably wait until we break through this before I'm gonna be buying it again eventually. I do usually like S&P more than NAS personally for me.
Really?
So again, yeah, actually, yeah.
Terrible. Come on, get on the NAS train. We need the NAS train going, right?
I like S&P
this
more.
This is S&P stuff. No. Out of here.
But look, it's really clear. Like, it's much more clear than NASDAQ. For me
personally... No way.
Yeah, of course. Look at this. We did have the perfect... Even if you look at it without even an indicator, so volume, look at the support, breakthrough, resistance, like super technical yesterday. So even without the volumes or anything, I would be able to take this trade. But here was a perfect rejection where I was looking for sells. And for S&P, we did reach the zone for buys. So again, this is why I like S&P more, because when NASDAQ is still lagging somewhere in between my zones where I'm like, okay, is it already reversing or is it not reversing yet? Like S&P is straightforward. We did reach the zone. We are right here. Take it or leave it. This is it. So we are right now for S&P. It is in my buy zone. We are getting a very good reaction for S&P. Actually, I would be able to start looking already for buys. And I haven't looked at it in the morning yet. Today I'm still in the gold and looking for pound eventually. But this looks quite good actually for me for a buy as well.
Fair. What are you looking at on pound then? You just mentioned.
I'm short still for pound.
Still.
I was looking for shorts yesterday as well already, but I did miss it because it literally touched the bottom of my zone where I was looking for a sell and dropped like tick to tick, so I missed it. I was expecting it to go a couple of ticks higher, given a good rejection, which it didn't at all. So for now, what I'm looking for the price to come back into the area of this previous consolidation, and as much as eventually into this area even. So this is where I would look for the reversal back for pound. This is the zone that the pound has been holding for quite a while already. So if we come here, I'm going to be looking for reversal. Now, if we look at it from the 4-hour perspective, we on the CPI earlier today, we did reach the point of control of the week. It is trying to reverse there. I did look for sells already earlier, but I'm not liking a reaction currently. So because we are still holding the daily point of control and we are basically bouncing in between those two volumes. So I would probably like more if the price already broke through it, then giving a pullback and then looking for a sell. Normally this is my sell area, but again, it's because we are bouncing back between the weekly and the daily maximum volumes. I would still wait slightly, but like my ID for for pound today is something like this, and then
Really
getting reaction here, confirmation, and then a buys. Yeah, but I'm short. You're bullish on pound?
Well, I'm just curious. What's your opinions then on, say, like euro dollar and the other sort of dollar crosses as far as that correlation type aspect that we often talk about?
So for the euro dollar, I was also short, and if you look at it here, so what I was looking at is that I was looking for a sell yesterday, but it didn't reach my area at all. So I was looking for a sell into the previous area. Let me just highlight it like this. I was looking for the sell into this area back. So I was expecting the price to form some kind of triangle. It did, but it didn't reach my sell area. So I wanted the price to come back to this previous range here before dropping, which it didn't. It now broke this volume here. So I'm quite bearish for euro as well at the current moment because we are below this volume, below this area of the volume that I was considering as a support, and now we are below this and testing it as a resistance. So I'm personally more short still for dollar as well until we reach this area here. So
Interesting.
So something like this. Maybe not from the current levels, maybe getting a pullback still and then confirmation, but I'm still aiming into approximately 115,750.
Fair enough. So is this purely off the technical structure you're seeing? Obviously, you mentioned the Jackson Hole symposium later on. Does any of that sort of semi-macro fundamental stuff come into it as well? Because I know it's maybe not heavily in your input, but you do obviously mention or talk about these, or at least notify them time to time, right?
Yeah, to be honest with you, I don't think US dollar is ready to go down yet anymore. As I said last week, personally, I think we're gonna still get a continuation to the upside. Because realistically, we did have the very contradicting data coming out for the housing market 2 days ago as well on Monday. We did have the housing starts versus the building permits are completely in the two opposite sides, right, coming out, which is like confusing for the inflation too. The inflation is right now around 3%, where when the Federal Reserve started to cut rates, it was about 2.2. Once again, we had only one time in history when Fed did cut the rates with inflation being above 3%. So there are multiple factors that are like there are still potentially can delay the rate cut. I think we're gonna continue the dollar weakness only when we have a very strong confirmation once again for the rate cuts, or we have a rate cut itself, 1 out of 2. And of course, the peace deal is gonna obviously make a big impact, but US dollar personal index, I see that the price did break the highs. It did break the big volume area here, and I'm expecting the US dollar to continue higher, like personally, and at least to 98.315 and then 98.570. So I'm bullish on the US dollar. That's also the reason I'm bearish on GU and EU.
Fair enough. Very interesting. Because I've got mixed views on that. I got mixed views on that. Yeah. So I definitely acknowledge the housing portion, and we do have mortgage applications tonight as well,
Yeah.
which is typically a very low impact type news event. But we have had certain comments around various Fed members about the housing situation, because they are seeing housing start to appreciate very rapidly just on the anticipation of rate cuts. And so there are concerns or worries about how that ripples out. You get that massive input with that, and then hence the rent input prices also go up. Interesting thing with inflation, it's very mixed, right? We've had the broader picture. You know, there's a huge basket of things. We're seeing certain portions go way up, other things come right down.
Yeah.
The one of the other very large input pieces has actually been portfolio management coming in, actually pushing up prices again. We've seen that time and time and again. Obviously, sorry guys, I'm dying. We've seen that come in time and again. Obviously, markets are very active right now, so you get more transactions. You get that higher input per inflation as far as portfolio management costs. And that has actually significantly pushed up inflation, which whether you consider that like a real input to inflation, because it hits that higher end of town, which doesn't really affect them, you know, rather than the lower end. We have seen the PPI, though, that came out very, very strong. Very strong.
Yeah, really strong.
And a lot of that actually translating through. So right now, it's not coming quite through to the consumer. I think the debate is going to be whether companies actually are willing to put that on the consumer or accept that they have to stomach the costs because they're concerned about people changing their consumer preferences and going to other companies or that kind of thing.
That's
sort of naturally just
after all.
But I'm seeing that potentially they just naturally integrate those price increases through the natural, you know, year-on-year increases, and essentially they stay flat.
Yeah.
So I think they know that consumers won't accept further price increases. I think they're very price sensitive right now. So I'm somewhat betting that we actually get the later input for inflation and these kind of tariff effects, and largely stay somewhat neutral, just like we've already been seeing. We still have to get through the inventory stuff, that kind of thing, for it to actually, you know, print and get a better idea. But interesting. I can see on the charts, right? My trouble with the Dixie, right? Like what you're saying, I can see the higher position.
Yeah.
But just like we've had a number of times where we've had these kind of like fake out type moves, where we look like we're about to go into a new regime or another higher cluster of price, and then we just fail and come off. So I'm very dubious right now on the continuation.
I think we are getting rebalancing after the non-farm numbers that came out and dropped the dollar quite lower as well. Like lots of big drop happened after the recalculation, and CPI and PPI rebalanced it because we got a little bit more realistic view instead of just expectations and the panic effect on the market. So I don't really think that we are ready yet to go down, but that's my personal opinion. Let's see. I think it's gonna still get
fair enough. We'll see.
I just think that the move on the non-farm was more of an expectation and emotions and panic, and this is also why what happened in the Federal Reserve happened, right? When people started fighting because maybe they are late to cut the rates and so on and so on. Whether the inflation showed that perhaps the Powell had a clearer view on that, and he is right about keeping the rates high as well, because the real effect of the tariffs is just getting revealed right now, starting to get revealed, because it's always delayed at least 6 months. So we've had
at least. I mean, the first Trump tariffs took 16 months to actually come into play.
Exactly.
Right. So it's very hard to measure. And then we had this round of tariffs are very well telegraphed. So we had companies pulling forward inventories, whether it's Apple importing iPhones, every other large company importing stock, and they're still churning through that stock before they have to hike prices with new inventory. Right? So there are a large degree of distortions coming through. You do have very much that price sensitivity after the massive inflation hikes that we've had, and consumers have very much been willing to shift their purchasing decisions based on that. So, and this is obviously very much the conundrum right now, both for the Fed, for economists, for banks, all of that kind of stuff everywhere. The market is dealing with trying to figure out exactly where we land. So we'll see how we go. But yeah, boss, like you were saying, yes, we are live right now, right here. This is us. So there you go.
Let's motorcar. We are just talking about the US dollar. So if you just go 5 minutes back in the stream, that's what we've been covering for the past 5 to 10 minutes, I think, already.
Yeah, exactly. And you've got two opposing views there.
Yeah.
Slightly. Or at least somewhat the same, but with a slightly different crossover as far as timelines. So that should give you like a good rounded view as far as the outlook at the minute. So,
what do you think about the JPY though, LJ? Because I'm not really closely following the JPY unless it's USD JPY. I'm not really also a big fan of trading it. So I don't consider myself a good analyst of the yen situation economy. So what do you think about this current situation there?
So the yen is definitely a tough one. We've had a lot of false flags from the Japanese economy, the finance ministry, that kind of stuff. So even this week, we had further comments around, hey, we need to get off that lower bound around the basically 0 to negative interest rates type spectrum and start, shifting that up. So I think there is, again, further increasing pressure. We've had that for a number of years now, though, and it ends up being like a dead duck, right? It doesn't fully play through. But we are getting to some actual cemented point where that will shift, because we have seen a pickup in the larger economy that would actually facilitate that. And so I think once we actually get that, you're going to have the double effect of Japanese rates going up, the US rates coming down, and then US dollar yen absolutely collapsing. That carry trade going out of vogue, people having to unwind those trades, secure profits where they still are, and you'll see a massive shift in that. And then that is going to be probably the main front runner for the US administration's desire for the dollar to come off. And the same way this week, Scott Bessent has given those further extra comments around Japan and what they need to do, basically nudge, nudge, wink, wink, get that ball rolling, because that will help us. And ideally, if you do that, we'll give you a more favorable trade deal, and that will offset the difference. Right, so there seems to be plates spinning in play, and we're just waiting for them to actually land and hit, and for all of that to come through right now. Yeah,
super interesting, actually.
Because if you get that, we're massively back off into the 130s at least for the dollar yen. And then that gives you that further sustained drive on, say, the euro dollar, up towards 120. At the same time, if you get an increase in PMIs and that kind of thing from the US, the market is very much pricing like a 52 to 53 PMI going forward. But we could get as high as 60, right? Yeah. And that you can look at the beta correlation for that. For the euro dollar, I think it's about 0.66. The Aussie dollar is much heavily weighted, like 0.89. And there's certain countries that are more heavily exposed to that manufacturing world trade type aspect. Yeah. But then that'll further emphasize, even though you would see that as potentially a stronger dollar situation, it actually benefits the outside countries a bit more. And you would actually see the euro dollar come up, even though it looks like a improving US outcome. So,
thank you. I'm going to have a look at the USD JPY as well.
Yeah, it's one of those, particularly if you guys trade options. I mean, that's not normally what we do here, but if you can take some long dated options on lower bands from where we are, looking fruitful. Especially when we all, the other portion is very much, we know that rates will be coming down. It's just a matter of when. And right now, we're not fully pricing that they are coming. And so chances are they're coming sooner rather than later.
Yeah.
But the market is still pricing slightly later. So there is a bit of alpha to be, captured there versus, what is the probably more realistic outcome versus what market pricing is. And especially when you get that double effect where everyone completely doubts the Japanese finance ministry right now. So, yeah. There you go.
Thank you, Andre.
No worries. Do you want to run over what you see for the Dixie? I just got to jump up for 1 sec and I'll return.
Yeah, go for it.
I don't know, pick whatever you want, but that was just a suggestion.
Don't worry. Do your thing.
Give me 1 sec, I'll be back.
Trade with confidence. We will literally just cover USD/JPY. If you go back 5 minutes, LJ went over the full fundamental overview for USD/JPY. Extremely interesting, extremely informational. So go back, rewatch it. And guys, by the way, this week we are running a secret giveaway. Only for those of you who watch carefully and pay attention to our live streams, the hidden words will be revealed throughout the whole day of live streams today. If you are here with us and you pay attention, you will be able to put the words together into the code, which will allow you to enter the giveaway. Okay, and win the giveaway as well. The first word of the code will be released when we get 100 likes. So make sure that you go to our live stream and hit the like button, because then you are going to be able to enter the giveaway. And also we're gonna know that you are loving the live streams, which is extremely important for us. So happy to have every single one of you here. Okay, what shall we go over? So for the DXY for today, at least for the next couple of days, I'm personally still bullish. I do agree on the rate cuts and that we are still pricing it higher and longer, right? A little bit delayed than they most likely coming. Now, I still am in the opinion that we are rebalancing after the non-farm payrolls, after the CPI and the PPI extremely strong coming out last week as well. We do have a big pack of data tomorrow coming out with the PPIs. I do think that we're going to still have a dip until 98,110 before going up, or on the other hand, we're still holding the daily point of control here. So purely from the technical perspective, I would expect either the price to continue to go immediately up or to bounce back to 98,100 approximately, and then continue back higher again. So for the Euro USD, personally, I'm still looking for the price to go maybe a little bit higher to 16,566 before selling it. And for the pound, again, it did reach my level for a sell. I am looking for either the pullback here once again, and then I'm going to take a high risk short, or preferably I'm going to be waiting for the price to break 134.96.97 on the pound futures and then pull back, test it, and then continue to go down. So this is my overview on the pound today. If you look at the GBP USD, because I know that obviously we here trade mostly Forex, right? Then on the GBP USD, it would look exactly the same. So I won't see the price to break through these lows here. We had the same lows and then accumulation of the volume, and then we are still holding the same level. So I'd probably want to see the price breaking through 134,880 before selling it once again. So I want to see this weakness in the GBP USD. Also, one of the reasons for this, not only the US dollar strength, but also the fact that we have that CPI coming in the morning, which did push the GBP USD higher, so the pound higher. I want to see this weakness coming in before I'm going to make a decision for selling it. But I'm mainly targeting this area here, at least for the GBP USD today. This is how it would look on the currency pairs, like the currency future pair, Forex pair, instead of the futures. You back already?
I'm back, yep.
And yes, I'm short on GBP USD now. I'm not yet in the trade. Okay, immediately saying I'm not yet in the trade. I am looking for the short. I'm waiting for the entry.
I think we've got height to about 135.20 before I would consider shorts on the pound.
If we are at 135.20, I'm not selling anymore.
Yeah, exactly. So that's why I don't see the shorts. You know what I mean? But we'll see. Okay, where were you saying before that you were going to short?
I won't looking for the short here,
So basically,
but
just
because it's
another
bounced.
touch at the
Yeah,
tops,
well, no, I'm
right?
not going
And
to be
then
selling here because we are bouncing in between this area, so I don't trade in the range. I want to see the start of the movement, so I want to see the weakness in the GU coming in. So I want the break of this level here, 34,860, then the
right,
pullback, and then selling it. So if I see this weakness coming in, then I'm going to take a sell.
right. So you want to sell on further weakness, a break of
Yeah.
this upper range, and
Yeah.
then pile into it.
Yeah, I
as
mean,
it's
I'm
already.
expecting the weakness, which doesn't mean I'm going to be selling it right now, okay, without further confirmations.
Yeah. Anyway, cool. Do you know anything about Wyckoff stuff, Anastasiia?
Yeah, but it's not something that I trade, to be honest with you.
I've never found it helpful, to be honest, personally. So
I didn't really integrate it. I mean, I know how to integrate it with volumes, for example, because this is what I trade. So the accumulation, manipulation, and distribution. I can confidently say that I somewhere use the concept, especially if it comes to manipulation and exiting the consolidation before. So for the confirmation of the end of the long-term range, I'm waiting for the manipulation first before the trend continuation, which by the Wyckoff you would call the distribution. But it's not something that when I trade it and I see it, I'm like, oh, this is this part of the Wyckoff methodology. It's something, the concepts that I apply, but it's more of based of my own experience looking at the charts than actually learning about the Wyckoff specifically.
yeah, I used to find it used to be more applicable. Like 10 years ago. The same deal with a lot of general technical analysis as far as patterns in particular, whether it's your wedges, channels, whatever variants of distorted channels that you want to pick up. The trouble is, since then, that stuff is so easily programmable. It's just churned up by algos, that kind of stuff. It's fallen out of favor. This stuff still works, but the strike rate where you used to have like a 75 to 80%, you're now down towards, anywhere between 50 to 60, because a lot of it gets front run by algos, because it's very easy to read. You can program something to, front run that, and then it gets arbitraged out of the market, essentially. It's one of those very easy to read, telegraphed type strategies and approaches that over time they come into vogue and then they start to decline, right? For that reason. So
yeah, this
these
is the reason
days,
I also don't.
I haven't seen it.
Yeah, no, me neither. To be honest with you, this is why I never recommend books on technical analysis as well. Because realistically, everything that was written in the books, majority of it was written 20, 30 years ago. And it was applicable at that point in the market, specific markets as well, like it was stock market in the most at that moment, So I think there is still majority of it can be applied to specific stocks. But if you talk about the very liquid markets, like for example, Forex or futures market, majority of it, I don't really find it helpful and profitable. Of course, I still apply certain concepts of it on daily basis. Of course, I look for the ranges. But for me personally, if the market ranges in the shape of a triangle or the edge, or for example, the rectangle, it doesn't really matter for me. The range is a range. The accumulation is accumulation. I'm going to stay away from it. I'm going to wait for the breakout. Whichever shape it takes, doesn't matter which kind of triangle out of 50 different triangles that we can name, it is in the market. The range is the range, and that is what I look for. So I apply specific concepts, but it's not that I'm looking for specific shape, price pattern, or the candlestick pattern either as well.
Exactly. And I'd say it's very similar to when it used to be very common to use like a stochastic RSI and MACD all together, find that crossover, and then you just pile into that. These days, again, it's very readable. You can program stuff. It doesn't always work. They get pushed way beyond the sort of oversold levels into oversold and more oversold and more oversold before you turn around. So I would say these days, those types of indicators, those inputs are just a piece of the puzzle. They don't have zero relevance, but just the confidence level has been reduced per what they used to be. So one of the best ways these days is still you overlay that with some kind of volume profile, whether using futures like Anastasiia does, or use VWAP with like tick volume on CFD pairs. I would say get both of them, cross compare, add it together with the other components, and then you've got an actual some form of a signal. Structure that with the prior levels to the left, the key levels, and then now you've got something to work with.
I never trade RSI and indicators like this, like oscillators, some kind of any kind. However, last week I met with a person who trades using RSI. Now, well, he just started trading basically. So I was looking at it, and I figured out that the current moment already, even if you do trade RSI, it's more profitable, in my personal opinion, to approach it from the opposite side. So if it goes in the so-called overbought area, it usually is the indicator of the further strengths. And I would look not for the selling and the reversal, but the opposite for the trend continuation at the current moment for buys. Or the same way, if it goes in the oversold area, I would consider it and approach it from the perspective of the more weakness and would look for the further shorts instead of the reversal. I think this is where a lot of people get caught. It's more, it's more interesting and more, I guess, logical in certain way to try to find the reversal. You can see the bigger potential of the move. It's easier, I guess, for the mind also to see this kind of situations than to, when the trend is already going for short for a long time, the price is falling. It's more difficult, I think, to decide to still short it for the last part of the downtrend than to say, okay, from now on, I'm going to be expecting a reversal and I'm going to try buying. But this is where a lot of retail traders get caught on this catching the falling knives, or obviously the opposite side as well, right? Prices rise and we are like, it cannot go up forever. It needs to reverse. So I'm going to try shorting it, and it keeps going up longer than we can pay for it eventually. So
definitely. And that's where I think they've become more valid on longer term timeframes. The shorter, right up to the hour now, is very illusory. It's very deceptive, right? The same way that old trope from stock markets. Stocks can be irrational far longer than you can be solvent. Right? They can keep going down and keep going down. You're like, this should be the bottom, sensibly, rationally, but typically you're in that extension of the rational period. You're in an irrational zone where it is an overcooking of price action. So you always have to take a very wide margin to account for that. So yeah, definitely those kind of metrics are much more valid on a higher time frame than they used to be on lower time frames. They're not invalid, but you just got to take it with an extra grain of salt. Right now.
I agree.
Yeah, Michael was saying Aussie dollar came back down. Yes, it did. Guys, I got stopped out on the first trade through here that I took. I was nicely in profit before that. Was considering take it. Didn't. I thought we'd hold out reasonably well. The New Zealand dollar, as extension, that cross correlation, took an extra dip, and that also dived Aussie dollar down. Whilst we had euro dollar and then pound dollar also come back at the same time. So I have re-entered this trade though through here. So I'm still looking for that reversal on the Aussie dollar. So I'm happy to keep re-entering on that. It's been slammed recently. Down, down, down. Very sustained weakness. Again, this is one of those examples. If you had like a MACD, RSI, stochastic, that kind of stuff running through all of here, you were seeing oversold, 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 and you would just be burnt the whole way down. All right, so you always got to look for those extremes. We've had New Zealand dollar get smashed today because of the Reserve Bank of New Zealand with their comments, but we are very, very, very heavily entrenched. So I would look for a marginal retracement on that for today. I have reasonable confidence in that. So, by the way, yeah.
Yeah.
20 more likes, guys. 20 more likes. And you get the first word. We've still got the ongoing giveaways at the minute. So smash the like button, guys. Absolutely punch through your screen. Get that thing done and you'll get the first word. Obviously, there's 3 words. You guys got to pay attention through the stream to get all 3 words. But we'll get the first going very soon. So hit it. Absolutely hit it. We got 218 of you. So you guys should be able to smash it. And then, yeah, that's also a very fair point, Stephen. Yeah, a range is a range. That's definitely the way to go with markets right now. So,
I suppose you for the New Zealand dollar as well, and the USD, you're still looking for something like AUD USD at the current moment.
Yeah, I am.
Really. Break the. You look at the high time frames. It did break the really strong level of support, and I see that you are buying AUD USD, so this is why I'm asking. So I'm having the same outlook for NZD.
Yeah, so similar concept, but I believe the current positioning, Aussie dollars sort of flow through a lot of the macro news per the Australian component from the past, say, 2 weeks. And so I think it's sort of at a better relative level of support and structure, whereas the New Zealand dollar is still susceptible to, a small run up and then coming right off. So I prefer on the same, reasoning to buy the Aussie dollar rather than New Zealand dollar. So because the structure between that is basically New Zealand dollar rises, the Aussie dollar will get that kickback from the cross correlation, being that the 2 countries are very similar. They share very high correlations, normally about close to 90%. And then that fluxes between basically 87 and 95 typically. So if New Zealand dollar does come up, Aussie dollar should also rise. And I believe Aussie dollar also has the position that it should just naturally, just as far as a retracement position, come up in of itself anyway. So that's where I would prefer to stay with that asset as far as a safer structural positioning type aspect for it to come up rather than taking a chance on New Zealand dollar, which, we're still very much in the flux point for that. So
yeah, the reason I was asking is because personally I don't really see any strengths here at all. And
on New Zealand dollar or on Aussie dollar?
On New Zealand dollar for sure not. If it comes to AUD USD, to be honest with you, also don't see any strengths. Like it does look a little bit better than NZD USD, but if you follow the same logic that I have for GBP USD and EUR USD, I don't really see that it going up. But let's see until the end of today's day.
I can see that, but it's just we've been beat down so heavily. So I need to get I need to upgrade my trading view here so I can put more stuff on here. But Mike basically had a similar position. He was wanting to see more downsides or test these lows here on the daily before we actually get some kind of stabilization. Now, I think through here, we will get that stabilization. We're still within the bodies of the prior lows through here. There's a 100-day moving average just up here, about 64.40 or so. We're sort of tapping into that. The 200-day moving average is right down here. Right, you've got a number of other exponential moving averages all coming through in a cluster through here, as well as the VWAP. So that's why I'm looking for us to basically pick up from here, find some relative support. I'm not looking for a massive drive higher as though we go, pulling right back into the central sort of price action up here. I'm just basically looking for a pullback up to about 64, 65 through here. So I think that's reasonable given the decline that we've had. I don't think this is exactly warranted. We did have the comments from the RBA that we would get further rate cuts. That was on the back of a very poor payrolls number for Australia. This subsequent payroll number after the meeting came in much better, completely reversed the prior payroll number. So I don't think this is 100% warranted. The other portion that's come through is around some of the minerals conditions that Trump has outlined around copper and further tariffs around that. Obviously, Australia is a massive producer of every mineral, frankly, copper in particular. So we got double hit with that. Plus the reversal, Aussie dollar has very high beta and correlation risk to indices coming off. So we saw the S&P, NASDAQ, that stuff coming off. And so typically when you get that risk on element coming back in, you get a bit of a drive higher. So these are some of the influences I'm seeing just for a relief picture for Aussie. So after that, I could see us coming off and coming back and testing that 200 moving average that I was saying is about that 6380. But for now, I think we need some relief as far as where we've been going. So secret word coming up. There you guys go.
I was saying let's see until the end of
Coming
today's day, but I had the microphone muted.
Yeah, we'll see. That's fine. I'm happy to wager. That's what the market is. That's what we do every single day.
Of course.
You turn up and you put your money where your mouth is. So
yeah. Secret word is already.
There we go. We're getting a poll right now, guys. All right, bullish or bearish Aussie dollar. All right, you guys got to vote. Right now, it looks like I'm losing.
But the problem is,
guys, I'm cooked.
That 90% of traders in the Forex lose money. So if you are losing now the poll, it means that perhaps you are in a smaller percentage when you're right. It depends how you see it.
Exactly. And I'll take that view. There we go.
Yeah. Are you looking
Beautiful.
for a buy for indices already right now? Because I do see that we are approaching the same highs on the smaller time frame, on the 5 minute. I don't really see yet the strengths. I would like to start buying in, but I do see the prices. Wait a second, I'm gonna open another one because I'm looking at this.
Aussie dollar, you're saying? Or wait?
No, the
Euro.
The500 and NASDAQ. We are approaching the same level here, so I would like to start buying it, but I'm not quite sure if it's yet ready or if we're gonna get another leg down before the continuation to the upside. Like this is S&P and NASDAQ looks like it's a little bit better, but not exactly much better for me. Maybe from this level immediately. Come on, what is this? How did that happen?
Oh, did you very well? Yeah, losing is part of the journey, mate. There you go. Yeah. So did you try to bring something up? Go for it. So I cancelled whatever you brought up.
Yeah, I'm thinking about possibly buying S&P already quite soon. Yeah.
Okay, we end up with 50-50 on the Aussie dollar. We're 50-50.
I'll take that.
That's a very interesting vote. Dude, very 50-50. That's crazy. That's crazy. See how we go, guys. We're doing it live. So either I'll take another L, a second L from the previous L, or we'll recover a good 6.7 trade. So we'll see what happens. There you go.
I'm looking for, I think, a buy for S&P if you come back into this small area here between 64.19 and 64.15 on the futures price. I'm gonna get here. I'm gonna be looking for a buy, I think, for S&P already.
Look, as far as my NASDAQ outlook, I definitely agree. Similar deal. Look, the NASDAQ is the one. I am in a NASDAQ trade.
You are already in
South London,
right?
Yeah.
Yeah.
So I'll show you my trade. Hang on. So this is what I'm in right now. And I'm basically looking for a retracement up to the underside of the channel that we sat in for this past while this week and then last week that we banged around in continually. Last night we broke out of it very heavily. That was on the back of the Nvidia getting smashed, basically, like we were talking about, partly due to the US government's input into Intel and taking a actual formal stake in Intel, and then some of the other comments from Trump around what chips they can supply to China or not and how the future of that goes. So we've seen that come right off. Obviously Nvidia is still the way. It's very much a impulse to buy any of the tech makers, AI, chip companies, all of that going into the future. Everyone sees that as very much exponential. So thinking an exponent curve, you start slow and then you go right up. And that's exactly what Nvidia has done. It's going to keep doing that just like the other major tech players. So there's very much the position to pile back in on any kind of dips. So that's what I'm looking for right now. As far as the options expected 0 DTE levels for today, so that means 0 days to expiry. Means coming into New York, these are when these options expire, and you have the market makers that supply these options. You get what's called gamma in options, and they have to buy up the certain asset, whatever it might be, coming towards that expiry in case they have to actually deliver the options and people haven't closed it out prior to that. So this is a very common trade I look for going towards New York. Today is about 24,403. Sometimes it plays through, sometimes it doesn't, but you have a very high hit rate with this. And the best way to play it is when you're got like a bit of a distortion between where the options levels are and where the market is currently sitting. So 23,403. We're currently at 23,360. 403 is up here. This is around the daily levels. One of the peak levels coming into basically rollover this morning. So you see this as basically what I'd normally do is level this out as like a T1, right? And then I would have the T2 up here. So you go, okay, rally to there, see how we contend with that level coming towards New York. Either you decide to take profit there, because often once you get those options filled and they exit the market, you get a bit of volatility, you drop back and then have a drive higher after that. So typically I'll seek to take profit wherever those options levels are, let the market fill itself out, and then sometimes look to reorder. So
yeah, this was a really beautiful entry as well. I saw this now when we started looking at S&P 500 and NASDAQ, but I did miss it earlier as well. I usually start looking at indices closer to New York now. I used to trade it in London. In the past couple of months, I found it quite dead in London session. So I missed this entry, but that was a really beautiful entry for a buy. So if you're already in it, supposed to keep holding it is the best idea.
Yeah, I mean, look, we've been smashed through here. Like, this is a bit, I think we're a bit extended per what we've got going on. A lot of people, like we talked about before, are looking towards, Powell's comments going forward from the conference. There's a debate there's a growing ecosphere of, a small party of Fed members saying more rate cuts, higher rate cuts right now. And then there's the debate whether Powell balks to the political pressure, starts to lean into that more in the sense that he knows that this is coming anyway.
Yeah.
Potentially, if I glide the plane myself, it'll be smoother than letting someone else go 50 basis points, and absolutely hammering the thing and causing destruction later on. So I think that's the kind of general outlook right now that we're seeing from the market, whether he stays stalwart and holds that fortitude, or somewhat gives a little and says, okay, I'll give you a little bit to appease you guys. You'll be happy and hopefully you'll quiet down and we can just continue as normal. So those comments are going to be very important, especially since we've had, not this week, but the past 2 weeks prior, a lot of US data coming out back and forth, CPI lower. We had the problem with the jobs numbers. We had the revisions, but then we've had PPI coming in higher. So we've got a lot of moving parts all coming in very conflicting right now. So it's going to be very interesting to see not just the FMC comments from tonight. That will probably be taken with less stock because that was prior to stuff like the PPI and such. But Jerome Powell's comments himself will be definitely taken in more stead. And there's also the chance that he goes, I'm not dealing with this now, and basically makes it like a nothing burger and says we're just on the same tote and tries to keep it quiet.
Yeah, there is a chance for that.
Yeah.
Now, Rahul, there is a one but to it. You are long already, and LJ is also long already, and I'm still not short. So I have nothing to lose yet. I'm still waiting for my entry.
Hey,
and you two
I am also
do have something to lose.
Yeah, to be fair, Anastasiia is not in anything. She's just looking for it. She's waiting.
Yes,
so we're not quite against her. But I am both long Aussie dollar and long Euro dollar. So Rahul, we're in the same boat right now.
I have a short biased, but not yet. I didn't yet enter the trade.
Because yeah, like I was saying earlier, I took profit on that Euro dollar short. I did end up re-entering through here after we had that wick. Let me just adjust this so you guys can see it properly. Right, so after we retraced here on the 15-minute, got that wick on the next bar, positive, jumped in there, and now I'm looking for this higher move through here. So Rahul, we're in the same boat, mate.
Wait, where is the target? What is your target for the number?
Just up here by the pivot, so it's just below 116.60. So 116.58. 116.58, right?
Well, to be fairly honest, I'm actually looking to sell from there. 116.57.
Well, there you go.
For EUR.
That makes sense then.
Actually, are in the same alignment for EUR. Yeah. And for GBP, we're still waiting for the short, but that's what I'm saying. It's ranging, right? So there is a very high chance that until euro gets to this level, if GBP continues to range, then euro starts pulling back and GBP starts pulling back, and then I'm gonna get my short entry. So we're technically not against each other here.
No, exactly. Like I was saying before, we're technically in the same stuff, just different like time frames, right? Per se. So, Bright Fuss. Is asking for Euro Pound. Do you want to give us your outlook on Euro Pound if you have any?
I actually don't, but we can have a look at it.
No, but yeah, it's been active today, to be fair, because of that pound news, right?
Yeah, I don't trade forex crosses ever.
Yeah.
It's been years since I've traded it. There was a time when I was trading all the currency pairs, including, for example, Mexican peso and crazy things like that.
Peso, dude.
It's extremely volatile. You know, this was moving like indices at that point.
Mate, the peso and the Turkish lira, nuts. You got to be insane to trade that stuff, honestly. Unless you've got
traded Mexican peso almost every single day at that point.
You got to trade next to zero, especially nowadays. It used to be a bit more quiet. But you got to trade like no leverage and just go for the multiples beyond that, because otherwise you'll get slammed, absolutely slammed. That is a absolute chaotic nutcase pair to trade, honestly.
That was 4.5 years ago, and it was amazing. Yeah. I loved it. I've also traded.
So you came out ahead. Yeah. 4 years ago. So what? 2021. So. Okay, so what? You're probably like, I assume, shorting. I haven't actually looked at the peso in a long time, but I assume shorting the chaos caused by the first Trump administration, and then you got the difference in inflation from after COVID. Yeah. Okay. Yeah. Fair enough. That makes sense.
It was actually quite technical. Really.
Yeah. It does, because the only thing you can rely on when you have that much just volatility, everyone goes back to pure text because each day you blow out certain things. There's no defined areas, which is why it's so chaotic, right? So it ends up being purely technical. So you can actually get some good, throughput.
Yeah, it was quite good, but I also traded USD. That was a little worse.
Oh, South African rand. Oh no. Oh, that's dirty. That's dirty. That's a tough one. That's a tough one as well.
I know.
Oh,
So that's since then I stopped trading all the crosses actually, and for years.
I mean, that's the super exotics though, right? Like this Euro pound is far more tame than those guys. Those are on the fringe. They're out there, right? That's the crazy stuff. You got to be, you need your helmet strapped in whilst you're at the computer just to take the hits from that. Right? That's tough. That's tough. God. Oh.
I don't know. It was going better for me than normal crosses actually at that point.
How? What do you mean?
I traded that was the time. Really seriously, that was a time when I purely traded technicals and Fibonacci, and it worked. If you have a right size of stop loss, and if you catch the movement of the trend, it was just going. It was.
Was that also 4 years ago though?
Behavior of indices at that point, actually.
Yeah. So was that still 4 years ago, like 2021?
Yeah, 2020, 2021.
So through COVID still?
Yeah.
Okay. Fair enough.
Yeah,
right.
First Trump administration afterwards, and then there's
post. You're still crazy. That's still insane. Like honestly, that's nuts. Like
I calmed down afterwards. After that,
you've come to an epiphany of like what am I doing?
Of exotics and crazy stuff to only majors and only US futures market. That's it.
Yeah. Exactly. Yeah. Chaos. Anyway, though, Euro pound. What are you seeing right now?
Let's have a look at that. I'm short on this. I would be short, the same as for GBP USD. Actually, I have the short bias on this. If you look at the daily, even we can see that the price has been difficulties breaking through the zone here. So every time we come closer, we do have the reaction. Beside this is actually the part of, I guess, manipulation, distribution, accumulation that I would be using, because we did break. That was the wrong thing. We broke the highs. So usually after we break the highs on the higher time frame, lots of retail traders start buying here with the buy stops and so on. So I would be expecting that lots of traders will be entering buys here, got completely slumped, took it all back down. We did have a retest of the same level once again here, which is a sign for me of a long-term reversal, at least midterm. It does look for me like we had lots of volume accumulated here. We are now below this volume. I think we are going back down. I would be assuming into approximately this area. If you look at the 4-hour time frame, the reason I immediately said I'm short is because if I'm looking at this, I can see immediately like lots of volume right above the price. So we just broke below it. We are just testing the same volume area. So from the 2-hour, we can see that here was the biggest volume. We are reaching the value area low. I would be looking into either the pullback back to the point of control in the big volume area here, majority of the volume, and look at some kind of head and shoulders pattern here, like another retest of the same zone. That is not what I want. There are other retests of the same zone and then back down, or the break of the value area low here from this whole move down. Completely locating itself below the volume and then pull back, some kind of pullback, maybe to this zone. Onto this zone doesn't have to be much of a pullback for me, and then I would be looking for the continuation of a short as well. So I would be looking for shorts for sure, in my personal opinion.
I would agree. I would wait for that pullback, just like you were saying, and then find the shorts from there. So I think pound has had a lot of sustained strength over the past 2-3 weeks. This week we've seen a bit of difference. Everything's sort of been priced in as far as like a macro fundamental geopolitical type situation. We had the trade talks. Obviously the UK was one of the first to get a proper trade deal and one of the best rates. Initially, that didn't first reflect itself.
Yeah.
Now we've played catch up. I think the euro definitely has a lot more upside as far as all the other, things in the wings, whether it's around Russia, Ukraine, that kind of stuff, security deals, as well as the central banking aspect. So I would definitely see probably more sustained upside for the euro against the pound. So therefore, as far as euro pound down, obviously today we've been knocked because of the higher CPI from the British inflation numbers just earlier. But I would look for a bit of a retracement and then for shorts. I wouldn't be going long on this pair at all.
No, I wouldn't.
So I think,
I don't see longs here though.
yeah, I think once we get that upside and you'll get more people laying into the shorts, as you can see with the volume profile, it's pretty empty. I think we'll get a exodus and sort of just come right off, and you go into somewhat of a air pocket and just drive further down and down and down. And any of those trapped positions higher will have to exit or hedge or cover, and we just drive lower. So,
Yeah.
Definitely. Also, by the way, Anastasiia, you got a message Mike. He's waiting for a response.
I will check it out.
All right. He just asked me to let you know. So
He's texting you now.
Yeah. So just there you go. Let me catch up with chat, guys. We can look at gold in a sec. I will say right now, gold has been very lackluster. We're in a rubbish range, that kind of stuff. We will go over gold in a second, but it's been a bit useless. So maybe quick catch up on pound dollar. We've had that again. You're looking for trades on that, Anastasiia.
Yeah.
We can do that in a second as well. I'll let you sort whatever first.
No, I'm fine.
Today I'm saying, hey guys, I recently lost my edge in the market. I stopped working due to the market condition. What strategy do you use, or do you have any strategy which you think are something everyone should know? I mean, that's very hard. In terms of any strategy that is widely known to the market is not going to necessarily have edge, because if it's known, everyone piles into that, and therefore it loses its edge. The same way back in the day before computers became very sophisticated, used to be able to arbitrage pricing between different exchanges, and they got eliminated. Same thing, we had that with crypto. Those are the simplest examples. Another point would be technicals and flag patterns, wedges, all these kind of technical patterns used to be very repeatable every single day in the market. Once people got more sophisticated with computers, with algorithms, with being able to analyze that stuff, it went away. So it's not like it doesn't exist these days in markets, but it just has a far lower strike rate because everyone piles in too early and then eliminates that. So the trouble with that is that at the end of the day, you do have to build your own sort of proprietary personal outlook on the market and your personal approach. Obviously, there's wealths of data out there, whether it's YouTube, TikTok, read actual papers from banks. So say Goldman Sachs, JP Morgan, you can just start Googling this stuff. Whether it's the Bank of International Settlements, looking for data on markets as a whole, the FX market. Try and then piece all of that together and see how you personally see the market and what most naturally formulates to how your brain works. Because some people are going to see just technicals, want to trade it point to point, that kind of stuff. Other people are going to lean more to why something's happening. And that, if you go to leaning towards why something's happening, might be more of a macro fundamental trader, right? And look for the places where that works and doesn't work. And overall, go through systematically each of these pieces, learn them in a general sense first, see which one leans more towards your personal givings, and then line it up with your own lifestyle as well. Whether you've got a job, not got a job, if you've got money in the bank, you're retired, who knows, right? And you've got more time to put in this, or you're young and have more time, or you don't have time. You've got a full-time job and you've still got like a mortgage and a family and kids, maybe, who knows, right? Find which one lines up and then build your own proprietary structure. Unfortunately, it does take work. You do have to put effort in. You do have to figure out yourself. And there's no holy grail to just give out. And anyone trying to sell a holy grail that they just print and give to you is probably full of bollocks. It might work for a period, but once it gains traction, it will get deleted because it's very easily replicable. You can put into, bots, that kind of stuff. It gets erased from the market. An example of that is the meme stock fiasco. That was very hot for a while. And ask the question why that has disappeared. Because it's very easy to reverse engineer that for funds with far more money than all the individuals. They can scrape all the data from Reddit, Wall Street Bets, all of that, front run the trades, and then it gets erased. Right? And they also have an interest to do that so that it doesn't mess up their own trades. Like we had some of the past firms that did actually get blown up in GameStop and that sort of stuff. So that's the trouble with anything publicly on the internet, any of the gurus, that kind of stuff. Your best bet is put the work in, treat it like a job, do it properly. It's going to take time, it's going to take effort. Once you get there though, it will pay dividends. So that would be my...
And I totally agree with you. I would just add to this that and then eventually every edge is gonna stop performing the way it performed before because the market just changes. This is why if you program something in algorithm, once in a while it's gonna stop performing, you need to readjust it again. Usually algorithms perform without readjustments from 3 to 6 months and then it blows it all unless there is someone human supervising it all the time to twist it and trick it to the market conditions. Because the market changes, volatility, liquidity changes, sometimes in a while you will be needing to adjust it. Perhaps it's the size of stop loss or the size of take profit that you are using, risk to reward, the quantity of trade, the trade duration, the timing when you enter the trade, and how frequently you do it. Perhaps the assets, some assets are going to stop performing because the economy, towards specifically this asset is going to stop working, or to stop being the same, and something is going to change. Like, for example, some time ago, like literally just 3 years ago, I was only trading oil. I don't trade oil at all right now because my strategy stopped giving me the results and returns that it used to give on oil. So I'm not taking any trades. I'm not trying to, bump my head against the wall, trying to find something that doesn't work. If it ranges, and I'm not going to enter the trade. So once in a while, no matter which edge you use, no matter which strategy you apply, it's going to stop working. And you need to know ins and outs of your strategy. You need to have stats so you know what to adjust when this moment comes. If you just copy someone from the internet,
I gotta answer a call. Sorry, it's my grand. Might be bad. All right, hang on. Give me a sec.
So if you just copy someone from the internet and you go step 1, step 2, step 3, step 4 with the strategies that they are using, and you don't have any idea how the strategy was put together and why is it working, why does the market reverse where it reverses, why does it continue to go in a trend when it continues to go, then you have no abilities to adjust it when the timing comes and you don't even know where to start. So instead of copying the strategy from the internet, just put in the work, like LJ said, into understanding the market, into understanding the macroeconomics fundamentals, market auction, for example, the strategies that you apply in ins and out, all the details. So you know which elements to adjust and change when you need to do so. So that would be my add to what LJ was saying earlier about the edge in the market. Yeah, unless of course you buy and hold indices like Warren Buffett, but you also need to remember that it depends on the returns that you are using, right? If you have a very big capital and you have the ability to buy something and hold it through the drawdown, then sure enough, the same can be applied to the majors in cryptos, right? You can buy and hold it, unless you are looking for the bigger returns, then it's work, it's active trading, because just buying and holding something is not likely going to bring you the returns that majority of people are looking for, especially with a small amount of capital in the beginning. If you missed the first word, you can still go back in the chat, find the word, and then write it down, and then make sure that you hit the like button, because once we hit 150 likes, the winner of yesterday's giveaway will be published and announced, right? One of you is going to win the giveaway from yesterday, and also we're gonna have the second word being revealed. So make sure that you hit the like button. It's about 260 of you watching right now, so make sure that you hit the like button, because then you are getting closer step by step to our giveaway. LJ is gonna come back, do not worry, he's gonna be back in a second, so just stick to the live stream. USD looking bearish. Let's have a look at it. Let's have a look if USD is looking bearish. I am still looking for the sell on GBP USD. I'm still bearish on Euro USD later on after the pullback. So I'm assuming I'm not gonna be short on USD but let's have a look at that. To be honest with you, the USD is looking horrible. Why would you trade this? Can you explain me why would you trade this? I mean, I'm gonna just tell you one thing, like, why would you trade something that is not going anywhere? If the market has no direction, if the market is flat, if the market is going sideways, why would you try to catch it? I personally don't trade this type of markets. I don't have a bias on USD at the current moment. If the market is like this for days, then I don't see the point of entering this kind of situation. I don't think it's short. I don't think it's long. I think it's sideways, and I'm gonna stick to this until something changes. You know, why would I try to guess the direction after the range is over if the range is not even over yet? We've been in the same range from the 1st of August. It's been almost 3 weeks that we are consolidating here. So what is the point of trying to guess in the direction? I don't see the point here. Love trading range market, absolutely. If you have the strategy for the range and market, amazing. Then stick to it, then follow it, fantastic. I am not the range trader. I do trade the reversals and I do trade the market continuation, the trend continuation. I never trade in the range, and you need to have a separate strategy for that. That is a very interesting question, actually, because personally, I don't have the daily target. Now, when you set yourself a daily target, you are essentially putting yourself in a very weak position, because first of all, let's assume that the market is not doing, like, market is not good today, it's not giving you interest. You have your daily target in mind, so even if market is not bringing you good opportunities, chances are you're gonna start chasing it. You're going to start trying to find something that isn't there and pushing for trades, revenge trading, over trading, just to get to your daily target, which is going to most likely result in blowing your account. Now, the second and the opposite side of the coin is, let's say the market is amazing based on your trading system, and today it's giving you lots of good opportunities, right? And you are hitting your daily target in the first 30 minutes of your trading day. Then what? Then you are basically stopping, okay? And you are cutting yourself maximum profits that you could get. You're cutting yourself short on a day that could make you a monthly income or weekly income just from this one trading day. So I see the reason you are asking this, because especially in the prop firm industry, lots of the times we are aiming for specific daily targets, daily profits to reach the overall goal. Now, in my personal opinion and my experience, this is not how the market works. Sometimes, like for example, I'm going to give you an example of my personal trading, right? July was amazing for me. July was a really great month. Now, the first 2 weeks of August, I barely took any trades. Like the first 2 weeks of August are really not good for me. The market was ranging. It was until it was coming to the point that I was expecting it would flip out and like stop me out several times. So I barely took any trades, especially in the end of the first week and the second week. I was like, you know what? I'm not gonna be trading when the market is this way until I see the more clear structure and the more clear confirmation. So if I would keep pushing these 2 weeks for the specific daily target or weekly target that I would set for myself, I would 100% lose lots of money. Now, the reason I didn't lose lots of money is because I was able to stop on time, wait until the market conditions were better for me personally, for the system that I use. And from this week, the market has been quite doing well. I've been able to take several good positions. And the moment when the market is giving me lots of opportunities, I'm not going to be stopping when reach certain percentage, because I know that today the market is well moving and doing the moves that I expected it to do for the past week and a half, for example. So I'm waiting for the market to give me good conditions, and then I'm maximizing my profits. While if there is no good conditions, I'm not going to trade at. So the daily target for me is not the thing at all. Answering your question. So you can take your own conclusions, but I don't think setting yourself a daily target, a weekly target, is going to bring you further. Я вот сейчас совсем не поняла этот комментарий. Can we have a look at EUR AUD? Again, that's not something that I usually trade, but of course, if we do have the request, let's have a look at this. It's been months probably. Okay, I'm lying. It's been 1 month since I looked at it because you guys asked for it as well last time. And we were talking about the sell-off to this level, which happened. Currently, I already can see that I would be bullish on this because, as we can see on the weekly time frame as well, the price did find the low, it did test the volumes here, and it started going up. We can see it from the previous several weeks as well that we have the very bullish rejection, then one more attempt of sellers to bring the price lower, then the breakthrough, and then continuation. So I can definitely see that if I would be trading this asset, I would have the bullish bias on this specific on EUR AUD. And let's see how far I would be aiming. I would probably be aiming towards the previous highs, to be quite honest with you. I don't really see any reason why the price wouldn't be going there. We did have a very good break and retest of the previous volume zone as well here. So we had the volume area here. We did have the break and retest, the break and retest. So from now on, I would be looking for the bullish continuation. I wouldn't be even looking into their short correction anymore from the current moment, to be quite honest with you. So I would, I see the longs on EUR AUD. I see the longs from either the current level or eventually the pullback back here and then the longs. But I'm bullish. I would be bullish on that. $150 likes complete. Fantastic. We're going to be waiting for Jonatan to reveal the winner of our yesterday's giveaway. So I'm 100% sure he is listening, watching in the background. So make sure that you stick with us to have chances to win the yesterday's and today giveaway as well. Tamil, I do not trade the ICT stuff, so I can't answer your question. The first word was revealed in the chat already, and for those of you who are just joining us and you don't know what we're talking about, guys, we have a secret giveaway running this week, every single day of the week when we are live, and we are live from Monday to Thursday. So during the live stream, for those of you who pay attention and stick with us till the end of the live stream, you have 3 words which together combined give you a code to enter the giveaway. So if you stick with us and you pay attention in the chat, you're going to be able to put those 3 words together in the code, attend the giveaway, enter the giveaway, and win great prizes from the 5ers. The first word of today was already dropped in the chat, so you can scroll back up, find the word, and stick with us till the end of the giveaway to find another 2 words to complete the code. And another giveaway is going to be tomorrow, so make sure you're not only here today with us, but tomorrow as well. And by the way, make sure that you hit the like button as well. When you hit the like button on our stream, you're gonna have the second word being revealed in the chat as well. So make sure you hit the like button and stick with us until the end of the live stream. Они мне просто обычно не дают слова вставить в их разборы. А теперь я одна, у меня полная свобода действий. GBP CAD. Let's have a look at the GBP CAD, and we're gonna have a look at DAX. I did have a look at DAX on Sunday. At the same time, I don't really trade the European indices. I trade only American US indices, which is S&P 500, NASDAQ, Russell. I also don't trade really Dow Jones. I'm not a biggest fan of it. My preference is S&P and Russell, actually, in fact. So, but yeah, we're gonna have a look at DAX in a moment as well. For GBP CAD, I am bearish right now. We are, if you look at the high time frame, we are in the range. So only range that I do trade is a range in the high time frame. As we can see, the price is having difficulties breaking through the level 87,500. Every time we come closer, we see only wicks are able to close above this level. So I do see the strengths of sellers every time the price touches this level, and we are getting closer back here. So right now, we still see the strengths of buyers pushing the price higher. We are approaching 87,500 level, which is also the point of control of the first week of July and the last week of June right here. So we have lots of volume traded here. We had already one test. We are coming closer to the second test. And as we can see on this 30-minute time frame, the price is already reacting to this as well. Now, the high-risk trade, the high-risk attempt would be to just short from here without actually waiting for any further reaction. So to just take a short based on the volume and based on the previous reaction to this level, 87,500 for the price. More conservative and lower risk opportunity for me, and the setup would be waiting until the price breaks through this current weekly point of control. Okay, closes below it, also breaks the previous low at 86.86, by the way. So if you break 86.86 as well, closing lower than that, that would be a more conservative scenario. So I would be considering those 2 scenarios for GBP CAD, either the high risk short from 87,500 or the breaks through 86.86, closing below it, small pullback, and then the continuation lower. And for targets, I would be aiming for 86.436, 86.025. And lower than that, I would be aiming into this area here from 85,290 and 84,900 level. Okay, so this is where I would be aiming for GBP CAD. By the way, we were talking about their also GBP USD, so I'm also short on that so far, which would be perfectly aligned in the GBP CAD too. Yeah, I do trade futures market, Sam. So I only trade futures. The only things that I trade are actually the pound future, 6B, 6E, the euro future, gold future, so GC. I trade also AS and NQ. So those are about 5 assets that I look every single day at. So eventually, once in a while, I add one of the assets, but it has to be a very, very good setup. Like, for example, 6E, AUD USD, right? AUD future, like 6J and JPY USD, JPY future. But it needs to be a very good setup that I'm looking at to add it. But on daily, how to say, basically daily, I trade those 5 assets, and that's it. Спасибо большое, тебе хорошего дня. Vamos, мы рассматривали EUR-USD уже. We had a look at EUR-USD as well. LJ right now is long on EUR-USD towards my short area. So this is, let's have a look at it quickly, and then we're gonna go to DAX. And I'm gonna cover DAX one more time because I did promise you guys to go over it. So for EUR-USD, LJ is now in a bind. He's looking into 16,580, 16,570, and 16,570, 16,580 is my sell area. So I'm looking for EUR-USD shorts still. If you look at the 2-hour time frame, we can see that we had lots of volume accumulated here. The price was forming the range from yesterday day here, from like yesterday, and we finally broke through it. We broke through this volume here as well, so we were holding this area for a while. Now I'm expecting to come back to retest this area and continue to go lower. So I'm bearish on EUR-USD later on today. And hence, this is also the answer to the question that we had in the chat. What is my outlook for FOMC? My personal outlook for the FOMC is the strength of the US dollar. So I'm looking for the strengths on DXY still. I think the rebalancing after the numbers on PPI and CPI. And by the way, DXY right now is literally in my buy area. So for DXY, we did have the pullback into the buy area that I'm looking for. So from here on, I would be expecting the continuation to the upside for DXY. We are on the weekly point, developing point of control around 98,105 to 98,060. So from here on, I'm expecting the DXY to continue up, and from here on, I would start looking for the reversal on EUR-USD and GBP-USD to the downside as well. Welcome back. By the way.
Thank you. Sorry, I had some family stuff to deal with, but yeah, definitely, I would agree, 100%. I am long euro dollar right now for that small retracement, I will say, because yes, we do have FOMC later. Plus, we've got the symposium with Jerome Powell comments following. So I do expect a more neutral stance, which will probably be interpreted as overall hawkish net, right? And then hence, yes, that dollar upside per that. I think after that, though, we will get reversed. So right now, I'm tentatively long euro dollar, looking mainly for a retracement after the past couple of days, pullback, right? And then from there, I would probably short following that. So same deal as Anastasiia. We're basically looking at the same stuff, just with different entry points. Yep. I've already entered. She's waiting to enter on the top side and then reverse things. But we're kind of similarly looking at the same kind of stuff. Difficult. Did I use Bollybands to enter? No, I did not use Bollybands to enter the EU trade today. I basically used more the technical candle structure that we had. We do have a general overextension as far as Bollybands. I will try and put up I'll see if I can convert it into the Pine script for TradingView. The other indicator that I have as far as the standard deviation, which is similar to the Bollybands. I use it over the past 120 bars, which tends to give a better outlook as far as the point-to-point range for the day. So I have to work on that. I still got to work it out with AI, get it to, convert the script, that kind of stuff. But hopefully you guys will see that soon. If I can get it to work with TradingView, I'll see if I can, publish it or somehow give it to you guys as well. So today was more of a technical, structural rebound with candles and somewhat oversold position per the past couple of days and the drawdown that we had. Yeah. Would it be okay if I just longed euro dollar? Look, we're already basically made most of the move, so I would not consider longing euro dollar right now. I will show you my screen. We're almost at my take profit right now. So we jump over here. That was the first trade I had. I jumped out of that, then re-entered on this position just here. We're now coming right up to that TP. So, I mean, considerations for long, maybe if you want to take a little scalp trade and capture a few points, but you're going to have to position it right because, I mean, you could easily get in the short term like a move back here and then we go up. So, if you're not already in, I'll be very cautious of jumping in further where we are now. We're already very much on the way. You can see this is storming up. We'll top out here ultimately as the first standpoint and then potentially pull back and then either run higher or completely collapse, which is what Anastasiia is looking for through here for us to just run right off. So we'll see what happens. Yeah, I would not recommend jumping in long now. There's not enough distance already approaching the top 7 levels.
I mean, there is not enough distance, and there is realistically, like, where would you put a stop loss really right now if you would buy? Like, where? In the air somewhere?
Okay, hang on. Let's go to another euro dollar chart so we can get rid of everything on here. Oh, I know. Okay. So if I was going to do it right from here, long position, say at spot, I would probably go like this, and then the top send, just here, right? You're at a 0.84 to 1. You wait for a touch of a pullback, maybe to these prior tops over here, and you draw that up. Now you've got something better. That's like 1.5. That's not too bad. But I mean, it's not great. You've kind of missed most of the move. Like, look at this drive higher. It's kind of already gone.
Yeah, I wouldn't be entering.
So I wouldn't. It's not one of those safe trades. It's a very high risk trade, and if you take these high risk trades over time, you're going to get burnt more often than not. You're better off staying with the safer trades, gradually compound stuff rather than jumping into risky stuff. So yeah. If we go back to this is going to load everything. No, it's not showing. Hang on. There we go. Yeah, so I mean, already sat in this for a while. This is the top side I'm looking for. If you're not in it, I'd possibly wait for now. See if we get a rejection of this top side, just like Anastasiia was looking for the pound to ultimately come off. The pound is definitely not performing the same way that the euro dollar is right now. So you might look for some adjacent pair to find a short, which might be better than trying to long something like euro dollar right now. There we go. Are you guys long, bullish or bearish euro dollar? Long or short? Let's find out. Let's find out. I mean, it's always a question of to what point, right? We've already ran a long way, so we might have some diverging opinions right here. But hey. What's my TP for euro dollar? So euro dollar right here. it's just below 116.60. It's about 116.58 is what I'm looking for. So this is right by the pivot level. This is a past historic level, not just for the past couple of years, for the past decade. You've got a number of levels around 116.40, 116.10, 116.60, 117, 117.10 that have come into play a number of times. So for today, I'm looking at 116.58, just below that historic level, plus the pivot for today as a final TP. That said, if we start to top out here, get a slightly lower high, I will just, take the trade for a bit less profit. But right now, we're still kicking on. So I'm willing to hold it and see it through.
What are your thoughts about DAX? Because I did promise to talk about DAX as well earlier.
The DAX, sure.
By the way, Euro GBP right now is in the sell zone that we talked about with you.
All right. Well, do you want to have a look at that first, or?
Yeah, sure.
Yep.
Euro GBP is right now in the short area. So if I would be trading it, where I'm not trading it, so it's not a financial advice, do your own analysis. But if I would be trading it, it would be right now in the short area. We are pulling back to the weekly point of control, to the very high volume cluster right here. We had also lots of accumulation of the volume here. And if we go closer to the 15-minute time frame, we're gonna see that we did have the consolidation as well. So I would be considering the reversal right now for Euro and GBP from the current levels.
It's not a bad idea with the Euro dollar coming up to its approaching its peak point as well.
Yeah, actually.
And you get that rotation right there. So it's not a bad shout at all. Let me just adjust some of my own positions.
Yeah, go for it. So I'm gonna have a look at DAX in the meantime. My goodness, DAX, here we go. So if you look at DAX, I was covering it on Sunday as well for myself. So we did pull back into this highs once again. We are pretty much more consolidating than anything else. We did cover with the team like buys from this area here, from the point of control of this consolidation, from the monthly point of control currently. The monthly biggest volume for trading for DAX was at 24,200 level. And we came pretty much very close to this area as well, tested it, went back to the upside. At the current moment, we are back at the very high volume area here, high volume node. We also are at pretty much the same level of the rejection, so very similar setup to Euro GBP. Based on this, now the things that I really do not like is that we are above the weekly point of control. So if I'm considering this, now the way I see it is if we are above the weekly point of control, where the majority of the money was traded during this week, and we are already Wednesday. So for the past 2.5 days almost, majority of money was invested at the lower levels than the prices right now, which means that majority of people are essentially looking for buys, and not retail traders, but we are talking the big market participants whose money is actually significantly moving the market and can influence the price auction as well, right? And the demand in it. So I would be looking for the price rejection to this area. Perhaps the sells right now are quite risky. If we are getting closer to this area, approximately 24,318, I would be looking for the continuation to the upside from here. Also, if we look at the high time frames, like for example, the same 2-hour time frame or 4-hour time frame, we're gonna see a very big week here. So the weeks that every time the price comes below 24,290 area, we're gonna see only the weeks closing below. So we didn't see any body of the candle actually getting like closer to closing below this level, which is also one of their signs of the strengths of the buyers for me personally, just based on the price action. So as much as I don't look at the candlestick patterns, I do look at this kind of things. So I look at their wicks, I look at their tests of liquidity zones for me, like volume zones. So for me, DAX is currently bullish, and I think we are getting back to the previous all-time highs here. And the same as we are looking for the bullish US indices, I'm looking for the bullish DAX today.
I agree, very similar. I think that, obviously the DAX has performed a bit better over the past 2 days because of that. It obviously doesn't have the NVIDIA component that massively draw down the US indices, particularly from yesterday.
Yeah.
So I would see very much bullish indications. I think there's definitely a persistent bid under the market as a whole, as far as stocks, indices, whether it be the US, Europe, global indices, Australia. Pick where you want.
Yeah.
Right now, we're very much on that hit of more liquidity, a reduction in financial, loosening of financial conditions, more M2 supply. Everything adds up to higher indices overall and a better future outlook. Whether that's temporary or otherwise, doesn't matter right now. That's what markets move on. You can debate whether the Trump, the tax reductions and trying to solidify that is good long term or not. Right now, it's a shot in the arm, bit of an adrenaline shot that's going to accelerate things. The tariffs have come in lower. There's a general willingness to work that out. So overall, it's upside for stocks, and that's what we've got. So buy on dips very much. Obviously, look at the structural technical picture to find those good pullback points and then level in. But yeah, definitely we got the bid under the market right now.
Hey Lewis, welcome to the stream.
Louis, how are we doing?
Been a while.
Good to see you, mate. Good to see you. Welcome back.
And by the way, we are getting very close to 200 likes on the live stream. Make sure you hit the like button, because once we hit 200 likes, we're going to have the second word of the secret code for the giveaway being revealed in the chat. So remember that you have 3 words which all together combined give you a secret code. If you put together the secret word today, you will be able to enter the giveaway and win special prizes from the 5ers. So make sure that you stick with us, hit the like button, and stick till the end of the live stream to get all the 3 words for the code.
Precisely. Sorry, just let me edit some stuff.
Don't worry. By the way, the first word can also be found still in the chat. So if you scroll back, if you missed it, you still have a small chance of finding it if you're really, really committed, because we did have lots of comments since then.
Yeah. That's part of the game. You guys got to pay attention. You got to be engaged. Pick up where these secret words are coming out. They won't always be posted in chat.
Exactly.
Sometimes we might say the secret word, right? So you got to be very attentive to find that out. So, right now we're making it a bit simpler, a bit easier for you guys, but it will get more difficult over time. And, there's going to be a variation in the rewards as well. Lower, higher, bigger accounts, smaller accounts. So you got to be on guard to pick that up. So stay engaged.
Absolutely.
Yeah. There you go. What else have we got? We're kind of in that interim period where we're just, filling out markets just before New York, right?
Yeah.
That pound, I will admit, the pound right now where it is
looks bearish.
Yeah, it does. Yeah, it definitely does. It definitely does. Just knowing the position of everything else, I don't like shorting it now, but I can very much see that.
If you look at the smaller time frame, 5 minutes, I still don't like really shorting it because it's kind of in the range still.
Yeah.
still pulling back. I'm still waiting for a little bit stronger confirmation. I prefer to wait a little bit longer and then to catch a pullback when the momentum already starts like going into the short, then entering it too early and then getting stuck in the range as well. But I do see that it's coming very close to the point where I'm going to consider it ready to take a short from.
We're getting there. We're getting there.
Euro USD is climbing also to my short levels. I can see it now.
Yeah, exactly. That's the thing I want to see first, for the other cross pairs to reach that level before considerations, right? So
true. Yeah.
we're playing catch up still. We got Michael in the background. We got the ABL team coming in. All right. Here we are, guys. Here we are. Any final words?
Oh no, don't do that. That's usually what Mike does. You guys.
Hey, look. You're just looking for those pound shorts. That's it.
He learned from the best.
What about words on the strength scores? What are you seeing on the strength scores, Anastasiia?
I'll leave it up to Mike. He is a pro in strength score meter.
Yeah, there we go. All right, guys. Thank you so much. Thank you, Anastasiia, for coming and joining us today.
Yeah, LJ, thank you so much. Great insights. Amazing to host it with you. I'm going to rewatch it on the USD JPY. So if you didn't, guys, hear the insights on the USD JPY in the beginning of the live stream, you want to rewatch it as well from LJ. In the meantime, I'm going to head back and I'll see you tomorrow together with Mike on the live stream.
Yeah, let us know how that pound dollar trade goes if you jump into it. So we'll see you tomorrow.
See you.
All right. Thank you. See you, Anastasiia.
Honestly, what is honestly just? I really need a kick. I need a kick button. You know, I need to be able to kick Jonatan out of this damn studio. Every damn time I come into this studio, there's fucking random, goodness knows what going on.
Nah, it was beautiful. It was great. We need more of that. We need the
Oh, there we go. Is he going to pop in and actually say anything, or is he just going to sit there with his camera off?
No, that was me.
Oh, that was you. Oh, okay.
Yeah, that was me.
Oh, right. Okay. Fair enough.
I was just adding to it, adding to the chaos. There we go.
There I am, just trying to sort out the back end of the system to stop us from using up our storage space, because we're running low on storage from all of these live streams that we do. So yeah. But anyway, how is everyone doing? Hope everyone is well and doing better than I am at the moment. I cannot catch a trade at the moment. Everything is just going against me. Yeah, don't know what is. I think I don't like the price action right now. Price action is really, really hands. But yeah, just not catching things at the moment. Not getting it. Not getting it.
Is your stream frozen?
Mine
is frozen. Mine is definitely frozen. I might have to refresh. It's fully frozen. Hang on.
Okay, he's gone. Okay. Oh no. Oh God. You're muted, Jonatan. Unmute yourself, you dipstick. You're muted. You're muted.
Right, here we go. Not muted this time. What's up, guys?
Oh man, production levels are gone to a new low here. Oh my goodness.
No, you know, listen. That air horn, that when I did, that was spot on. Like that was.
It was.
How was that spot on? How was
That
that
was
spot
perfect.
on?
No, it was spot on. It was perfect. It was like, dude, Mike, I can sense that you're in a drawdown. I can see it in your eyes. I can feel it.
I'm in so much drawdown. Look at this. Look at me.
Yeah, yeah,
I'm in so much drawdown. It's ridiculous.
Man's
Yeah.
in pain.
yeah. You're just coming in here
He
complaining.
wishes he was in Spain.
Oh, do you
the
know
S
what?
is silent.
Stop with you
Yeah.
coming in here criticisms. Honestly, come in and be supportive for God's sake. This is the ABL segment, not the segment of criticisms. My goodness, this is supposed to be let me pick you up, Mike. Let me help you. Let me give you a signal.
Dude, you're like an old grumpy man. You kicked me out like that.
Whatever. For God's sake, honestly, my God, this is ridiculous.
Okay, I'm back now. I'm back and I'm nice. I'm gonna be nice.
Oh, do you know?
All right. Oh, come
All
on.
right,
man.
hey, it's us. Yeah,
come
Jonatan,
on,
you're
Mike.
part of the ABL team. You've replaced
Okay.
Mark. He's too old.
Come on, Mike. Dude, I have a course in ABL as well. I
Yeah,
can be
yeah,
here.
yeah,
I can
yeah,
definitely be here.
Yeah.
All right. I think it's ready to announce the winner of yesterday's giveaway.
Yes, sir.
Today we're gonna do 25 hub credits. So you can take that 25 hub credits and you can put it towards whatever account you want to use. You can. It's almost like a discount, you know.
You got a savings discount there. Voucher.
Yeah.
Vouchers.
So am I sharing now? Can you think you can go to, because I'm on the laptop. So I only have one screen. Where is
I'll let Mark do it because otherwise I'll start doing it and Mark will start doing it and we'll both be.
There we go.
Jonathan's doing it, so it doesn't matter.
Okay, Jonathan's got it. Yeah.
Okay. There we go. One winner. Can someone please activate the drum snare?
Hang on. There we go.
There we go.
There it is.
Do this. Ah, perfect.
That was
Scott
good
C.
timing. That was
good timing. Yeah, done this a few times.
I'm on it.
Scott C, my man. You use
Scotty, brother.
Scott C.
$25 worth of hub credits. You can you're gonna get an email, and we will credit. So it's important that the email that you've signed up to this giveaway, that it's has a hub account. So if you're not signed up to the 5ers hub, you will have to go to the 5ers hub, and you have to sign up with that email that you used in the giveaway. We're then going to add 25 hub credits to your account, and then you can use that towards an account, an evaluation.
Beautiful.
All right. What are you guys looking at today?
Are you eating anything, Johnson, today?
No, so I'm actually home today with my son. Well, I'm always at home. That's what I do. Work from home, and that's a bit sick of being at home. I want to go out, do things, see the world, But I'm here. I'm at home, and my kid's sick, which means getting interrupted from time to time.
So now you know what it feels like.
I hate when my kids are sick. Terrible. Terrible. It's just a terrible day. Oh, wait. I don't know about that. That said, I've got a cat, which is arguably much worse. So
yeah, I think your cat
that's my child.
Yeah,
that's
I think that
children.
cat has...
One cat is 6 children. Like, that's a very expensive cat.
Yeah, that cat has definitely cost you more than any kid would have cost you, probably.
Yeah. But again, you know what? A cat though only lives for a short period of time, so it's got to get the costs in.
No, it doesn't, dude. It's got 9 lives. I've tried it again and again. It keeps coming back to life. Right? It keeps respawning. I feel like I'm playing Call of Duty. Dropping bombs there. It keeps coming back. What do I do?
Oh, amazing.
I swear I've done more than 9 rounds, and it still comes back. All right, so God.
All right, guys. I'm gonna leave you. I'm gonna leave you to the real trading. Maybe good subject for today's live stream could be how to deal with the drawdown. Could be Could be a good. How does it feel to be in a drawdown? I think that's a good subject. But you know, I think
I don't know if you get enough pleasure from eliminating the other 8 lives from your cat. You know, for that kind of drawdown. All right, it doesn't really compensate.
that's it's a weird segment. Segue into Let's try to not
Let's not get ourselves cancelled for animal cruelty.
Yeah.
Come on.
You know, we had a discussion. We had a discussion on Monday. You know, talking about different sayings where how to there's many different ways to skin a cat, 1,000 ways to skin a cat, and then we talked about how you eat an elephant, and you eat it one piece at a time, and things like that. So there's a lot of recently. There's been a lot
one
of
piece at a time.
Yeah, that's how you eat something. I never heard that. How would you eat an elephant? Would you eat everything at once, or a piece, one piece at a time?
The thought has never crossed my mind.
No,
I guess Mike's a hungry man. He'd be eating half and half. There you go.
I do think about eating different animals sometimes. All right, I'll head off and spare you the whatever I'm doing here, and I will see you guys later.
Alrighty.
All right, take care.
Soon.
Magically disappear again. There he goes.
Yeah, there we go. I was waiting for that.
Magic's in and he magics out. Oh dear. It's always nice to have Jonatan with us. Always a pleasure. Anyway, let's get some music back. What did he do to the music? Let's get some tunes going.
I haven't not done anything.
Anyway, when a man needs to eat, he will eat. Very true. Very true. Same with a child as well.
Yeah. You got to feed a family, right?
Yeah, exactly.
Elephant's pretty good to feed a family. I mean, that's a lot of food right there.
I was asking you in the chat about pound Aussie, and you ignored me. So now I've got you on the spot.
Mike.
I've got you on the spot now. I want to know, what do you think about pound Aussie? Do you think we're potentially going to get some sells coming in?
I would say on the bat, yes. So I'm looking for Aussie to come up, definitely. I think right now what we're still dealing with, there's a bit of a laggard with the New Zealand dollar playing a part in that, with that cross correlation. So Aussie has had those bouts trying to come up right now, but the New Zealand dollar is still flagging a bit.
Yeah.
Obviously, pound has also had that excessive push because of the CPI numbers, the data out earlier. I would say Aussie dollar comes back into vogue. So we've very much come up to that topside resistance, just like you've got outlined. And I could definitely see a bit of a pullback for the pound Aussie, indeed. But I would only be waiting for that to see that on the Aussie dollar also starting to run and New Zealand dollar starting to run in tangent with that before I was confident in those Aussie dollar cross trades to really lay in.
Yeah, so. I mean, I'm looking at it from a technical perspective. Ideally, I want to see it take this last area of liquidity here and either come and take this inside bar on the 11 hour or reject away from it. So that's why I've set myself actually I'll probably bring it a bit further down. Set myself an alert on pound Aussie for that area there. We've tapped into that wider structure, which was, I think, on the 4 hour, was it? So it was a 4 hour engulfing, or it might have been a 5 hour actually. But on one of these, it was 5 hour. There we go. So I'm still expecting us to get some kind of better reaction from this. So taking this last area and then going on from there. So that's kind of my thought process behind pound Aussie. So if I look then at the 15 minute, we're basically coming off slowly off those tops, and I think probably what we'll do is we'll do a little bit of a bounce off here, previous resistance, now support, come back up to here and then look to sell off. That's kind of my trade idea for pound Aussie. I don't know if it's going to happen today or not. That's the only thing. It might not even happen today. We might just sit here for a little while as a daily candle, and then tomorrow we'd then see new highs and then sell off coming into Asia again. which seems possibly more likely scenario, because we haven't really. Okay, we've got some news coming out this afternoon with the mortgage rates, and we've got FOMC minutes, but there's nothing else really to shift things around too much. So it might be that we just hang around here for a while, and then tomorrow,
consolidation, and then come off. Yeah, definitely.
Yeah.
I would agree. I think it's more of a gradual come off, and then coming into Thursday, Friday, that we actually see it pull back significantly. So I think from today, the first day that you get those, double bubble news events, obviously, Aussie dollars being pulled down by correlation with the New Zealand bank announcement today, and then we had the other side with the pound CPI coming through. So,
because I mean, if you look at this now, the run up that we've had on the 5 minute, for example, we've expanded out these moving averages, and it feels as though we need to come back and kind of retouch this 200 before we then start to sell off. So my expectation is probably we're going to get a little bit of chop, maybe come down to here, maybe even retest these lows further down and just chop around before we then come up to this area here, and then maybe look for sells overnight. The problem is I'm not sure I'm comfortable taking those sells overnight, because it would be a set and forget. And given my ridiculous drawdown level right now, I would have to risk like 0.01% to be safe. And then, then it's not really worth catching it. So, but we'll see. But yeah, I mean, if we look at the strength scores, let's hang on. Let's.
Your strength scores are not looking too great today. That's a bit.
Strength scores, and all the scores on the doors. Strength scores.
Ding dong.
Currently, the yen, New Zealand is just literally, it is, like we said, it's gone 6 feet under. It has just fallen through the floor and then some. If we look at yesterday, it was very, very weak as well, as was the Aussie, and then yen was very strong. So I still feel as though any kind of cross between New Zealand and Aussie versus the yen might be worth keeping an eye on. Reason being is you can see that the yen is still the strongest at the moment on the daily, and obviously the New Zealand is incredibly weak. So I've been keeping an eye on New Zealand yen today. And it's just reached this point where it's just consolidating down at this lower low. It's created liquidity either side of it. It's taking some of it at the moment, but it is now just kind of ranging where it is now. Given the fact that Asia is now closed, are we going to see many moves on an exclusively Asia pair? Probably not. But again, it means that maybe overnight there's an opportunity. If you find something that that looks like a good setup. I mean, given where we are, we've got this nice structure here on the daily, right? So I do feel like we're at a nice point to at least pull back to kind of 86.5, maybe kind of hitting back to this previous support area. You'll probably see this as a daily candle might close quite strongly, with maybe some wick rejection, but ideally, what a nice trade would be is maybe see it come down, take these lows, maybe even take this liquidity level and then push on up and then maybe target something like that. So maybe a trade would be something in the region of, if I was to say, take that liquidity level, stick my lows, my stops just there, and aim for the highs there. That might be a semi-decent trade to look at overnight. But again, as I say, it's just a question of when do you expect that trade to come through, and are you comfortable with it playing out overnight when you're asleep? That's the tricky part. But it does look, because I mean, if you look at the 11 hour, and this is why I like things like the 11 hour, because the 11 hour gives you a perspective on how things are closing before having to wait for the 12 hour. So you're not seeing a significant wick rejection here, and we haven't come down to test this actual wick on the 11 hour. You can see that just there. So this, not that one, this wick here, that's where I want to see it come down to retest. And then I think we're in for some decent areas. We are down to this 161.20 level as well, which was on I think it was on a weekly chart, was it? Or on possibly on a daily chart. It was one of these. If you look at the structure where we are, we've bounced perfectly off that 261 area. Maybe this was a daily move. Let's have a look. I'm not sure what I was marking this off. I was obviously marking it off something. Basically, this move here, as a fib, it's bounced perfectly off the 2160, and now come down to the 61, the 161. So yeah, that would be a potential trade idea. I can see that pound Aussie is coming off just a little bit more. Let's have a look. Yeah, it's coming off more, so pushing further down. Just ideally, I want to see it hit these areas before I want to sell. Just with drawdown it is at the moment, I feel as though that's kind of the preferred setup, really. Yes, that cat did indeed cost him 6 figures, Rudolph. A very, very expensive cat. And it didn't cost it in medical bills or anything else for that matter. It was purely a stray paw on a keyboard. So yeah, not in his good books, I think is fair to say. Not in his good books. So
no, not at all. Terrible cat. Jesus, oh, dude, that's probably one of the single worst ways to get clapped up for the most silly, ridiculous thing in history. Oh, dude, not fun. Because what do you do as well? You're like, okay, that happened. Now what? Right? There's no recourse, nothing. That kind of thing. So yeah, not a fun time. But hey, the cat lives for now. As I've said, she is now my charity, project, right? So there we go. But,
I'm just getting hang on. I'm just getting a message from my missus. Hang on a second.
No, that's all right. That's all good. We can dash over to my chart. Yeah, there we go. Cool. So some of you guys were asking about euro-dollar before. Are we stalling out? Yes, marginally. I had this TP just here. I ended up taking it as we started to pull back. So I have TP'd on this now. This is on the 1 hour. Go back down to the 5 minutes. See it closer. I'm going to draw this back so we can get that out. As we started, so originally the TP was just up here below 116. It was at 58.5, which we came just within half a pip from. So once we got there, we got that wick starting pullback. I ended up taking it just here at about 56. So I'm out on euro-dollar right now. Would I consider buying back in? Yes. At this point, we're coming closer to New York Open. So I'll probably wait to see how we tackle that, to be honest. Especially given Monday, Tuesday was very wish-washy once we came into New York. Right, London has been very good. Coming to New York was very messy, both Monday and Tuesday. So I was up about 4.9% yesterday through the London period. Gave a lot of it back through New York. Ended up, up 1.8% on the day after that. So I went right back down to plus 0.5% and then came back to 1.8. But yeah, so I'm sticking cautious on the New York period right now because we're getting a lot of dislocation as far as the correlations of certain assets, whether it be the NASDAQ indices in general. Gold came off at the same time. We also had dollar yen coming off, but equally euro dollar coming off, pound dollar coming off, Aussie dollar coming off. A lot of things going, contradictory to each other throughout the period. So,
Carl, we are a couple in many, many ways, but it would be the longest of long distance relationships if LJ and I were a couple. Totally different time
put
zones.
that online, dude.
Why?
That's meant to be a secret. Now your wife's going to find out. What do we do now? We're cooked.
Oh, what am I going to do? Oh, well.
Go on.
Never mind.
Divorce, and now you're going to marry me. That's it.
Look, if I'm going to live off your profits from trading, that's fine by me. Oh dear.
Truthful.
Yeah. Tell me what you think about Aussie yen, because I was talking about the strength scores earlier, and Aussie yen is one, as well as New Zealand yen. Aussie yen actually looks better for a pullback to push higher than New Zealand yen. In fact, really oversold. Really oversold. What do you think?
I definitely agree. So on the same structure of the initial input from New Zealand dollar yen, or New Zealand dollar in general, obviously NZD and Aussie dollar have very high correlation. They tend to follow each other. It's about 0.88 to 0.89 on average, right, over the long term. So if you are looking for a bit of a snapback as far as New Zealand dollar after the RBNZ today and a bit of recovery, I would prefer to lean on the Aussie dollar because it will get the same impulse per that correlation, but have slightly less risk. And a lot of that other macro front has already been worked through. We've already seen Aussie dollar come down a fair bit over the past couple of days from last week. So definitely, as far as whether we go Aussie dollar or New Zealand dollar, I would say Aussie dollar is the preference. You're getting the same throughput if New Zealand dollar does rise, but you've got safer entries, more security. It's not going to get whacked as much. So I would definitely say that is my preference. And you can see here where we've come down through this to this S2 as far as the pivot points. So I would see longs from here for a bit of a recovery, if at the very least to the prior underside. That's not straight at all. There we go. That's a bit better. Hey, that's kind of good. It's a bit wobbly.
No, that's right. It's okay.
Mate, I've been doing this too long for me to be this bad at drawing straight lines still. Right?
I'm going to buy you one of those drawing pens. I'm going to buy you one of those graphic drawing pens.
I was watching Anastasiia do it before. She just hammers it. I don't know. I was like, I've been doing this for a bit.
She's pressing some like key on her keyboard.
Yeah, maybe. Yeah, to make it straight, because she's just going like that. Like, I mean, I can. Why didn't I do that before? To be fair, hang on. Let's try again. Let's do this in real time. Okay, that's still kind of good. It's we'll work on it. It's a work in progress. But anyway, guys. So up to this basically the underside of this price action cluster through here. You've got a clear defined level right now. You can see as far as the Bolly bands, this is on a 1 hour as well. We are pressing price through here. If we go out to let's go to the 4 hour and see a bit clearer. This is a point where we have pushed those levels. So we do have this underside exposed. But for now, after such a deep drawdown, you do tend to get a bit of a snapback as soon as, say, the Aussie dollar, New Zealand dollar starts to recover. And then that's why I'm just looking for a move up to here. That or else you get this underside. You could get a pause through there somewhere and then come off. But I would say we actually do get a more substantial drive higher and then potentially come off after that. We do have the backdrop of the yen becoming stronger over time. So I would, over time, expect a deeper move lower for now. Yeah. But you can see these are very, very, very heavy candles, and we're quite sold already. So I would see longs through here, bit of a recovery just as far as a retracement, and then continued downside from there. So agreed on odd yen longs. I was trying to say yen and long at the same time.
Odd Yong Leng.
Odd yen longs from here. So
There's a
odd
tongue
yen
twister.
longs from here. Yeah, exactly. And then from the top side though, I would see further like potentially a corral back lower once again. I think the general yen shorts are somewhat coming out of vogue more and more. So we had that in the prior picture. We had a slight pause as far as the Fed degree, with the Fed cutting rates, staying on hold. There was even talks of potentially hiking rates before. That seems complete out of the picture. And now it's just, again, that question of when we're cutting rates, but there's more and more and more increasing pressure. It will be sooner and it will be more intensive than it was before. And the other counterpart to that, we've had comments through this week from the Japanese finance ministry that they do need to get off that lower bound from that zero interest rate and negative interest rate picture, because it completely distorts the economy. Whereas housing, inflation in general, the same problems that we've had in the West since the GFC. And, you just get more and more amalgamation of distortions through how modern finance and Western finance works, right? So they need to get out of that. They've racked up a huge amount of debt through the central bank, and they have to unwind that, come back to a normalization to join the real economy, since everyone else has already come back to that position. So it doesn't work anymore.
I'm just looking at Aussie yen at the moment. It's forming some very peculiar structure at the moment, and I can't quite get a read on it. It does feel like a long right now. It really feels like a long, but
it does.
Don't know.
I think just until, so if we go back to let me check New Zealand dollar, US dollar. Right, so it's doing a similar thing where we're kind of just chilling out here before doing anything.
Yeah.
So I think that's what's holding us back. If you go back to the AUD as well, so Aussie, we've got a similar structure where we're just pottering around. Right, so I'm still long Aussie dollar. I'm in this position from earlier when I was on with Anastasiia. But we are just very lackluster. We did have that drive higher through late Asia into early London. That then pulled back. That was at the same time as New Zealand dollar coming back again. And then after the drive higher from the CPI, from the pound, we pulled back a touch. So that cross correlation pulled us off. And then we also had the snapback from the euro dollar coming into early London also.
Yep.
Yeah, I think it'll be a very gradual and then all of a sudden all at once type situation. Right? So I think we'll go...
Yeah, agreed.
And then suddenly just drive. You finally work through all the stomach pains and then just pop off.
Yeah, exactly.
Yep. And then we'll get this same move. Once you come up to here, you get a slight pullback and then a further drive higher into end of week, potentially, depending on what Jerome Powell says and depending on the FOMC minutes as well.
Yeah. Yeah, it's interesting. If you remember from our chat this morning on ABL, where I was saying that I think the Aussie dollar would come lower. So we didn't actually push down from as high as I thought we would. We actually pushed pretty much straight away. Didn't tap into this area though, which also then, and again, we've started with this liquidity at the bottom of it. So again, there's part of me that can't help but think that there is still further downside in the Aussie against the dollar. Just looking at how it is on the 1 minute, for example, even just looking at that, it's somewhat triangular in shape, but it does. Where is it? Where's me? I never do channels. You're the channel guru. Where's the channels?
It's
There we
in.
go.
Yeah, there you go. I was about to say.
I mean, whoa. What happened there? Sorry. Don't know what happened there. It does feel as though there's maybe some room for us to push further and just push this down, because you've got these areas of liquidity further down, and dip into this stronger area. But I mean, I may well be wrong. I have been for the last 2 days on pretty much every trade.
I would say if we get down that far, I would be very concerned about the further direction for Aussie. I think that would be completely unwarranted. We've already got hit pretty heavily. I think that would be very concerning, especially, when you zoom out like that and go to the daily.
Yeah.
That would say we're in like a deeper correction altogether.
Yeah. See, the problem is this is our NFP candle, and so the question is whether or not we trust the basis, the foundations of that NFP candle or not. And
however, the prior conditions leading up to the NFP candle, because that is when we got that very strong flip to no rate cuts, right? That's completely off the board. We saw massive US dollar strength, both on the Aussie dollar, Euro dollar, pound, dollar yen, across the board, right?
Yeah.
So even that push down was probably extended. So hence, if you consider a portion of that an extension, and then the NFP candle a correction, this band we are in now, I would say, is part of that overextension portion. And thus, if we close below that, it would be very significant that massive further downside is in there for the Aussie, which right now I don't see as valid from any macro fundamental outlook, where the big players are positioned, the forward outcome for US rates, all of that kind of stuff. So I would say we need some kind of pullback. The 200-day moving average is at 63.80 or so. But I think that's definitely out of the cards for the time being after the pullback we've had. I think there needs to be a recovery first.
That looks like a really nice setup on the 15-minute on Aussie yen. There's still 6 minutes left on it. So I would be cautious, but it does look like a decent setup where we've wicked down, tapped down, and then we've shot on up. We're just sold off so much. Look at those moving averages there. That's just insane. So it does look decent. I mean, I don't know. You got one here, a rejection here, another one here. Yeah. What does the 1 hour look like? See, ideally, I'd want to see the 1 hour take this low and then head up. That would be my preference, which is why that 5 minutes left on that 15-minute candle doesn't fill me with confidence yet. I think this drawdown has left me rather unwilling to pull the trigger, when ordinarily, like, getting up to funded phase, I would have taken this trade and I would have taken $50, $100 profit out of this, whereas now it's just not happening. It's just not happening.
The other portion with the beatdown from Aussie dollar is to do with the extra tariff stuff around copper and that kind of stuff that Trump announced the other day.
Yeah.
So you've got that impact as far as Australia, and then a flow-on effect to the New Zealand dollar.
Yeah.
Then New Zealand dollar has been further hit by the Reserve Bank announcement today. And so you get this, like we we're talking about in ABL further, like once they do start running, they keep running, and it's very extended. And eventually you get this long consolidation sideways and then a massive pop the other way once again.
Yeah.
So we're still teething through
Yeah.
those inputs at the minute.
Pound Aussie has gone further down in the time we've been speaking, so it has pushed lower. I think probably the next area to see some kind of support coming in is probably around here, into this structure. That's probably the next most obvious place to maybe see some buys come in. And if we've broken that, then that move is gone. But it should tie in nicely with the 50 as far as the moving average is concerned. So probably expect some kind of reaction in this area here, slowly ebbing down and then pulling back up.
I would say, as far as what we're seeing right now, that's probably like a very good shout. Pretty clear. You've got positives on both sides. Obviously, the overextension, or potentially, just a firm input from the pound data now that's been priced in, but you do have the corresponding opposite side of Aussie correcting, which is also valid. So you've got the double on both sides, not just on one input from the cross pair.
Just want to pick up one thing that was here earlier. So trade 550.55. We do see your chats. They do show up. There you go. So we do see it. It all amalgamates here into the background, but we get loads of comments in both YouTube and Twitter. Mostly we get them from YouTube. So hence why you might not see many comments coming from Twitter, because they're just not happening.
Yeah, so we got to churn through. Sentube, yeah, definitely, man. I mean, that's been the story for ages now for Japan. We've gone through this cycle, since 2018. It's been years now from them trying to get out of that state, and arguably you can go all the way back to 2000. So the same way that after 2008, they were basically the model for instituting QE. They've had to keep going, and now very much they realize, though, you can't go on forever. There has to be some kind of stop point, because they are part of that Western world first tier type band, and obviously they've got certain strengths in their economy, which has allowed them to sustain these kinds of monetary policy actions. But right now you are getting to extreme stretches, and they also realize that. They've just been waiting for the exact punch point to get off that boat. So we have seen a recovery as far as the general business cycle, economic sector in Japan. After you obviously had a lot of very aging population, a lot of people retiring. That's a headwind against that. They're now starting to pick up. So there is going to be a crux point, especially after the inflation ban that we had from COVID, where they need to take advantage of that, just get out of it, push ahead and force that to come through. Otherwise, they'll just keep going the same cycle, and then you'll have very, very, very detrimental effects through that. So,
Seller's asking about the Euro Aussie on the 1 hour. If you're going to look at the 1 hour, go at least one time frame higher to get an understanding. So at least go to the 4 hour. We have broken these highs. So yes, theoretically, there is bullish momentum. If we go back to what is left for it to target, well, yeah, there's certainly levels up here. There's this one here, I think, if I'm not mistaken. No, it's not. It's not a wickless candle or an inside bar. So I'm not seeing anything for it to target at the moment. If we go to the 1 hour, maybe there's something there on the 1 hour. Let's go and have a look. We've got to go all the way back to April. And let's see, what have we got there? We, again, don't have anything apart from this inside bar up here on the 1 hour. I would be cautious on trying to short the Aussie further. Much to what we've been talking about with LJ throughout the day, right? You're talking about this significant move up. Yes, it's punched past areas, but I wouldn't necessarily say that this is bullish. Just because it's broken up higher and taken new highs, I wouldn't say that's necessarily bullish. So I'd be cautious of trying to long it. Yes, it does look bullish, so you could look for longs further down, but just look at those moving averages. It's quite feasible that this could come down to here or even down to here to tap into these before you look for further longs.
Yeah, I'd be very wary of it being a fake out, first of all, and then pulling back and then driving higher.
Yeah.
Just like we've been talking about, we should have some level of relative outperformance for the Aussie dollar because it's underperformed recently per the euro, per the pound, per everything else. And euro dollar has outperformed relative to the pound and the Aussie recently. Yeah. So we haven't got the follow through for Ukraine, Russia, US talks in general, and the European Union. We've had echoes of, we've had good chats, but nothing material. So that's very much on the cards. So you do still have dangers there coming through. And right now it's very much on the US side for things. So also, who's this Jonatan random guy coming in?
He just weird guy, just jumps in randomly. Is there a way we can ban him? Magic sound. It just magic sound.
Yeah, especially magic sound. What is that kind of comment? Is that helping?
It's rubbish. It's just really, really
terrible.
It's really quite.
Get rid of this man. Get rid of this man. That's not the secret word for today, mate. All right.
I think what
you're short one word. For instance,
the phrase I'm looking for is just trying too hard. It's just trying too hard. Just that.
Yeah, trying too hard. That's it. That's the secret word today.
Yeah.
Trying too hard. Get him out of here.
Yeah, exactly. I'm just looking at this Aussie yen. It is forming a nice structure. Ideally, I would like it to come down though. I'd like it to still come down and just take at least some of this before heading higher. But it is sitting nicely above this. I think it's the 100 moving average. But it's not breaking this yet. It's not breaking this structure. So there's still something blocking it. So we'll see.
But, I was going to say as well, gold. Atish was asking earlier what happened to gold. Do you want to explain what happened to gold, Mike?
What happened to gold?
Yeah, what happened to gold?
Gold shafted me is what happened to gold. That's what gold did. Gold absolutely shafted me.
And also, thank you, Courtney. Yeah, Jonatan, you need to get out of here, mate. All right, we got the backing of the chat.
See, he doesn't even understand how this makes sense, right? He's saying, "Be quiet and give me a setup." Well, if we be quiet, how can we give you a setup? I mean, it's like,
all right, silence. We need a 1 minute silence.
Yeah,
everyone.
Exactly. Gold actually right now.
Mike, you're not being silent. Silent. Okay, we're done. That was 3 seconds. We're good.
Gold right now might be good for sells. Depending on how it plays out on the 1 minute right now, I would say you've got some decent opportunity for sells. It has come into this block that was a previous massive engulfing candle that was never respected, and we've tapped into it. Oh, sorry, not that one. This one here. Sorry. This structure here. So we had 1, 2 tapped in nicely. Look at that 50 EMA or 50 SMA. Looks ideal. Mike, you use the trade tool in Trading View. For what? For what?
I don't know, dude. He's not even.
Know what he's doing.
This guy know how to.
He's just not making any sense anymore.
Are you good, mate?
Yeah. It's nonsensical.
What is he talking about?
I have no idea.
Go to bed. Go to bed, son.
This is the trade idea for me on gold. Right. Ideally, I'd want to see us retest this engulfing candle. Right, and that would be the trade idea.
Gold's hard, man. Right now,
it is very hard. It's very, very hard.
Anastasiia was looking for shorts through here, but I think the level we just popped through I believe invalidates what she was looking for.
I don't know.
The trouble is, so the level we popped before would have been, for me, a preferred short. After breaking that, I can see us coming high. This is why I don't like gold. I can see too many levels in between here and about 33, 34 to be valid.
Yeah.
And all of them are not amazing. They're just reasonable potentials.
Yeah.
But not high enough confidence for me to say, like, yes, this is what we're doing. If you caught the Asia low and you drove high, yes, that would be very sensible. But again, just like we were talking through yesterday's session around this point, we were stuck in that middle area. So I feel like very much that's where we are. We seem to be playing from a collapse through New York, finding a bottom into early Asia. You get the pickup then, or the sell then as well. And then coming into mid to end London and early New York, it's very much in that neutral zone. So
yeah. I'm just looking at generally on a higher time frame. It does look like sells. I mean, we've tapped into this structure here that was previous support on the 11 hour. We've pushed back up. Now we're tapped back into that on the 1 hour, as I said as well. I would say sells still look decent, but we do have all of this cluster of liquidity up here. What I do like about gold, even just to sell down to this wick here, is that it's perfect equal lows on the 1 minute. So you can see here, just there, wickless candles, perfect equal lows. You wouldn't think it otherwise, but that would be an area for price to target. Frustratingly, Aussie yen
started running already. Yeah, Aussie dollar is starting to come up as well. Same with New Zealand dollar starting to. We seem to have found a relative base on like the 1 minute to 5 minute.
Yeah.
So I think that's helping it there also. Plus, dollar yen has also lifted a touch.
That is frustrating because this would have been my trade. This would have been my trade. This one, in fact, no, it probably would have been down there and take it up to the moving average, something like that, or even theoretically up to there, because that's the next kind of structure where it pushed down from. This is a nice kind of formational structure. But
I think, like Timothy was saying, though, we need Yasin to come in here and block Jonatan. Honestly, get this guy out of here.
Look, he's pretending to be somebody else now. Look, Jonatan was in, and now it's somebody from the The5ers funding team. You know, I mean, it's Jonatan, please, you're trying to.
Akram will sort him out. You know, he's ready to take action. So,
but yeah, I mean, I wouldn't be so comfortable getting into, like, if you went into it there. I don't know. I'm not as comfortable getting into Aussie yen now. Feels like it's already made a move.
It depends on what kind of outlook.
Yeah.
Right. How long do you want to hold it? Because I think we have a lot more legs in it. Obviously, if you're looking for, I guess, into New York, into mid New York, end of New York, possibly into tomorrow. If you're looking for, this next 15 minutes, half an hour. And we've already pushed up if you're looking for scalps, that kind of thing. But
BK, if only an idiot would sell gold, then why are you watching an idiot on stream? Who's the idiot now? If only an idiot would do it, then why are you watching?
I would not sell gold from here, to be fair. I would wait for that higher move to that 33, 34 right now, after the break from the recent highs we're at. But
Jonatan, I'm not going to be streaming for much longer. So don't make me swear.
Wait, definitely. Wait, Mike, you've got YouTube controls, all right? Just get rid of this man. Just take it over yourself.
I can't get rid of
that's a shot across the board, all right?
I cannot get rid of the account owner. That's the problem,
mate. He's not just trying to sink your battleship. He's trying to launch nukes on your home country as well as thinking about ships. All right, he's not playing by the rules. That's a dirty.
All right, it's fine. I'm
It's a dirty shot.
I'm gonna buy a packet of Lego and I'm gonna break it in front of him. I'm gonna record a video message of me destroying a package of Lego.
You gotta set it on fire though, because that's the only way the Lego becomes not Lego anymore. It needs to melt, so it's no longer usable.
This is what I'm gonna do. I've got a better idea. I'm gonna stick all the Lego into a tin can, and then I'm gonna set it on fire, and then I'll drill holes into it, just to really get to him. That's gonna be my revenge.
Nice.
For his attacks on my abilities. Yeah.
What's the other fake Lego?
Only here on for criticism. Yeah, exactly. Is there fake Lego? Yeah, actually there is. Yeah.
Yeah, you know that other.
That's my fake Lego. Look at that.
Yeah. So instead of sending real Lego for his birthday, you gotta send him fake Lego. It says the ones that don't connect to the real Lego. Yeah. Just as a haha, suck it. Right.
This holds on gold. I'm not in this trade, but if this high holds, then that would be a nice trade on gold. If it doesn't,
I mean, I could see. Yeah, if you're looking very short term, I can see that as like a temporary pullback. Ideally, I would look for longs from 33.28 moving up to that 33.34 personally.
That was no, that wasn't. Yeah, so that's not a valid trade. The idea is, I mean, theoretically, the stop loss is basically there, right? But the trade gets invalidated if we break that wick. So I'm not going to be trying to take that one to save my funded account. But I do still think we've got shorts coming in because we're just hanging around. We've got half an hour left on this 1 hour candle, and we've just come up to that 50 moving average. Don't know. I mean, maybe we're going to come back higher and take some of this liquidity down here. I haven't done a full markup, but there is certainly stuff left behind on the other side as well. So yeah. Does anyone know how you move the alert on MT5? It's not like MT4 when you just click on it. I don't actually use alerts on MT5, if I'm honest.
I was about to say, I don't use alerts on MetaTrader at all, so I have no idea. I have them on other personal brokerages and stuff, which I get a text message and that sort of thing. So
Nora, I love the choice of words there. Gold is tickling her profit.
Nice.
Jonatan lost his funded account, did he? You see, but you see, there's a difference between me and Jonatan. I take the higher ground. You know, I take the high road. He takes the low road. Right. The only low road I'm taking right now is my drawdown. that's my low road at the moment. Oh dear. Yeah, it's broken that structure. So, I mean, it's not necessarily completely invalidated because we're still in this wider wick, but I would have preferred it in this area where it was this retest in this little pocket here on the 1 hour. Looking elsewhere, the other alternative is on here.
Coming right up there, right? That's what I'm saying is the upside.
Yeah.
Right now.
Yeah. So that's also the alternative area. You can see this 2 hour engulfing that wasn't respected. So again, you'll have orders sitting in that area. Let's see, what else do we have on the 4 hour? Semi-decent. Anything on the 5? See, the 5 really suggests that we're even going to come up this high. That's where the 5 could theoretically look for a reaction from. But we're still in this area here. These 2 wicks, so there's multiple areas. So it's really just looking for then on the 5 minute, which I think on the push down, we didn't really have anything. I mean, theoretically, actually, you have got this here, this little pocket here. But those, I think realistically, the next stronger one on the lower time frame is this one here.
Yeah.
This pocket here, see a retest in that area.
I agree with Timothy though. Like you gotta use those AI skills you've been developing to, eradicate Jonatan. Right? He's the enemy of the robot army. Okay, we're going full Terminator here, right?
Jonatan's obsessed with his own bots.
No, he is, yeah, but he's the enemy bot, all right? We got divisions coming up here, right? We got
he's
teams.
obsessed with his own bots, but the problem is that he doesn't share his bots. He's very selfish like that. He's supposedly got these bots making millions for him, and he doesn't share the love with anybody. He just keeps it all to himself. I mean, what kind of friendship is that? It's just abusive. That's what this is.
So it's a team effort.
Yeah, exactly.
Interconnected.
Going back to Aussie yen, interestingly, came back to this area where I was expecting a push away, smashed through it, and now it's acted as support. So, yeah, interesting to see how that plays out, because it's now sat above the 200 for the first time in quite some time, actually, on the 1 minute. So are we now going to see a little bit of bullish momentum coming in here? It's quite possible. So potentially another entry opportunity, depending on how this 1 minute, that 1 minute, not so much. Let's see on the 2 minute. Yeah, see it take the low and then head on up would be a nice trade. So see it take the low just there, that one. And actually what I'd do is I'd stick my stops just below that structure. And that would be the trade. If it does come down, just to have the stop below the 200. But yeah, that's I just don't like these quick projections. Maybe the top is 33. Could well be. It could well be Akram. Could well be. How do we feel about US dollar, Euro US dollar, dropping down to 16.30? Let's go have a look. 16.30.
I don't know. I think if we drop to 116.30 right now, that would argue we're smashing through 116 and going for another drive lower. I would not be confident in us getting quite that far right now. I would say the limit, like 116.40 at the extent, really.
Yeah, I think I would agree. I think 1640 is probably, 1640 sits nicely where the 200 is. There is liquidity further down here.
Yeah. But you see where we've got those like higher low. Even that somewhat retest coming into early London where we drove down aggressively. We didn't establish a new low. We ended up picking up just above that. So if we did get down to 116.30, I would say that means you'd have to have Trump announcing something or something else is popping off, and then potentially look for a drive below 116 into the 115s at that point.
I mean,
That'd be very harrowing.
I see our order block guru, Victor, has just sent a message suggesting that he thinks there's a potential break and retest on EU.
Has he?
Theoretically, yeah. What do you think? I suppose, yes, there is an argument to be had for this as a break. I mean, I suppose, I don't know what structure he's talking about. Is he talking about on the 5 minute? I'm not sure. Victor, if you're in the chat, let us know.
I think a lot of this bearish pressure is amounting to expectations for the minutes and Jerome Powell coming forward, that ultimately he'll be neutral despite their prior comments and the other tangential Fed members being somewhat bearish or calling for extra rate cuts. Yeah. So if he comes out basically neutral on a differential scale, that seems as slightly more hawkish. It's not quite hawkish, but at this point when everyone is forecasting future cuts, being neutral is the equivalent of hawkish. So I think that's where the pressure is coming through. So once we clear the Fed minutes tonight, and then we're going into Jackson Hole symposium with Powell's comments there, we'll get a better overall picture. But I think we've already been pretty beat down. I would not be betting on further upside for the dollar.
Really?
Right, I wouldn't be betting on. No, I think a lot of this has come down to covering, a bit of hedging in that anticipation of those short-term moves per that outlook. But I think the forward differential from that will shift. A lot of that comes down to the PPI that we had that was very strong, but the CPI, etc., is not coming through. I think we will get an outcome where companies actually stomach a lot of that inflation input per the tariffs, which people are not looking for. And I think it will go straight to the consumer. Right now, we're seeing about 20% of that input come to the consumer. The rest is being eaten by the companies. And I think they will continue to eat that, knowing that the consumer won't put up with it. They can't afford it. Their mentality right now says, if I see further price increases, I'm out. I'm changing my views, changing my consumer preferences, my purchasing ideas, that kind of stuff. So they'll shift to other lower cost products, just like we've seen the uptick in input prices, like through Walmart and that. So I think they're very wary of that. I think there's a mismatch between people expecting that will be fully put through versus companies being willing to stomach it. Because the other thing is, a lot of companies put up prices well beyond inflation through that inflation period.
Yeah,
and
absolutely.
Just join the trope, because now it's okay and acceptable and popular to put up prices. And if you're a executive at these companies, you either got to play catch up or just get the best price for the company to do well.
While you can.
And that's what they did. While you can, exactly. So join the boat. So a lot of them actually have massive margin where even if they let that come up, they're still making way more profit than they were before. I think that's one of the things that people are forgetting through that too. So
I wish my wife would understand that concept of the cafe. She was she's so reluctant to raise prices, and I'm like, look, everybody's raising their prices, and she's like, yes, I know, but we shouldn't be doing it. And I'm like, okay, but it's costing more. So it's not just our competitors that are raising prices; it's our suppliers as well.
Yeah, exactly.
Do you not then just look at the daily on the Dixie? Do you not think that we're seeing some support here?
I do, and this is where the sort of contradiction comes in, where I can see the technicals playing out exactly that way. And I was having this chat with Anastasiia. She's very much bullish on the Dixie, but I'm sort of seeing it as a bit of one of those, as we've had a number of times, these kind of fake out moves through the Dixie, where it seems as though we're turning up. And then we come right off. And every other time we've actually had more substantive reason to actually shift position and actually flip the script and go higher for the dollar. Right now we've got a temporary shift, a bit of shuffle, but I don't see where the picture is now changed in the reverse to support that. Right? We've actually got an increased number of pieces against that. And so I think this is just a temporary stochastic up and down type situation where we are getting a bit of a rebound, and then ultimately the dollar selling continues from there.
Yeah, I mean, just looking at the daily with those trend lines, you can see here we've got 1, 2, third test. We're broken out of that one, and now we've started this this bullish move slowly but surely, right? Do you not think that? I mean, if you look at where we are, we tapped down here with this wick when we moved on the 1st of August. We practically tapped right into that wick and then shot down, and that was obviously our NFP news. Do you not think, though, that given the uncertainty, that again, there's so many moving parts right now, I think that's where actually I don't think even the market can really figure out where it wants to go. It feels as though everyone's just vying for positions right now, rather than anyone having a clear direction on where things are going. The Fed indecision in itself is indicative of that, surely.
Yeah, I agree, but I think there's more of a pricing to the opposite side. So basically, people are thinking, yes, more input prices sooner, more heavy, and that's kind of where the market is leaning. I think it will come undershooting that. So I think you have a slight asymmetric response to the downside, and then obviously you do have the Fed change up coming through. I think we're not fully pricing a grenade being thrown in per what Trump, who he wants to appoint, and try and reshuffle the entire Fed altogether. So I think that's where that's being underpriced, and we will see that feed through. We had all the more reasons prior to actually keep moving up. Now we've got less. So hence, I can't see how from here you continue to pile into that when we've actually got less reasoning, less forward reasoning, current reasoning to actually shift that way.
Yeah. We don't know, Jonatan, whether he's watching or not watching. His son's sick, so Jonatan is in control of these things. He just pops up like a magician out of nowhere. So he could arrive at any moment with that second word, or he might leave you in suspense. Who knows? Shane is asking, what are the EMAs? So these are actually SMAs. These are LJ's SMAs. So you've got the 50, you've got the 100, and you've got the 200 on there. So 50 down here, 100 and 200. Those are the ones that LJ prefers to use. I have sent you this indicator, by the way, on WhatsApp. So you should have. Yeah, I did. You should have a link to that. Yep. And how does the Dixie affect the rest? Well, the Dixie is essentially the dollar, right? So
essentially the entire
it's the reserve currency of the
financial system for every single asset on the planet. So
if you think about what do we look at on spot gold? We look at against the dollar, right? We look at silver against the dollar. We look at everything against the dollar. That's why the dollar index is so powerful. And if you're looking at the Dixie for any kind of indication of where the markets are going to go, it's more often than not going to help you with your bias, right?
Yeah.
But yeah, I mean, for me, looking at it on the 1 hour, where obviously we have a slightly different picture, it just looks bullish. Especially with that previous 1 hour candle that we had earlier, it just looks really bullish. We bounced off this structure here. We're bouncing off the 50. I mean, the 4 hour is kind of this slightly uncertain area, right? Where we've pulled up above the 50 and the 200, right? And we've got the 100 just here. So that one's less convincing, but I can still see bullish momentum coming into the dollar. And the end of the day, we also know that the long-term plan for Trump, for the dollar, is to weaken it, to have it weakened. So it would therefore make sense for various institutions around the world to be getting the best possible price for their dollar to sell it at the highest possible price, right? For when that time does come. So yeah. Rupert says, sorry, never heard so much waffle. Sounds like a group of analysts on the sidelines. Have you actually identified any current opportunities across any crosses or timeframes? No, we haven't, Rupert.
You ain't paying attention, mate, I would say.
The market right now isn't giving us any clear indications. But Rupert, if you would like to join us,
30 minutes.
There is an email address in the description. If you'd like to join the live stream, then you're very welcome to do so, and give us all of your signals, give us all of your trade setups, and we would happily hear from you. But if you want to keep trolling, then be my guest. Shane saying, if the dollar is weak, then gold goes up. Not necessarily.
Not always.
Not necessarily. Yeah. Yes, the theory would lend itself that way, but not necessarily. So yeah, and vice versa for NQES. Again, not necessarily. Historically, yes, but these days the market is not following those kind of traditional rules, let's say.
Same with euro dollar and the European markets. Like, there's always a cross comparison. So you got to think about the forward outcome, not just where you are, and then the relative level for stocks and what your projected forward outcome for that timeline with stocks is. And then you've got to consider the tax implications as well. Most countries have some kind of, you hold the asset for 12 months, you get some kind of tax discount. So, right, when you're buying European assets, you got to also forecast, say you're a US dollar citizen, right, or asset manager, you got to forecast the euro dollar for 12 months out whilst buying the European market. Okay, so if you see European market coming up 10%, but you see the euro dollar coming down 8%, then you've made essentially no money and you're going to have a terrible return because you got to hold it on that 12-month timeline in order to get the tax discounts, right? So it's a much more intricate moving piece than just this goes up, then therefore this goes down. It's not always that way. They have somewhat of a correlation. That's why we talk about correlations and you talk about beta, right? So that's the sensitivity to the shift in another asset, right? Per risk on, risk off, currency moves, bond moves, stock market moves, the whole bit. So you got to put all this stuff into a larger matrix and then figure out the math in totality to actually get a proper picture. It's not as clear as just one-to-one, this up, that down. Otherwise, no one would turn up and be trading and putting their input. You just systemize it all, have a robot doing it, and okay, cool, good. See you later. Not quite how it works.
XEvids, congratulations. Yeah, GU is selling nicely at the moment on the 1 hour. And Timothy is quite right. This isn't a signal channel. If you want signal channels, go to Telegram. There's millions of them, and they'll happily help you blow your account without any effort whatsoever. GU for me actually does look quite bearish, but I wouldn't be getting into it now because you're basically in the middle of this structure right now. So I'd be less willing to get into a sell on GU, but it does look, again, looking at how we're crossing over with the moving averages, got to say it does look good for sells. So yeah. First word, Edwin, if you go up through the chat, you'll find it earlier on in the chat. It is up there. So go through and you will find it. Denman Gamehouse, I don't know why you always come in and say hi 5 times, but hi. Good to see you.
He was in here before. I think he's just trying to say hi to you, Mike. No.
Okay. Hi. Maybe it's like an Irish person when they're talking on the phone and they go, when they're saying goodbye, it's like bye.
Bye.
They don't.
Yeah, see you later. Bye. Catch ya.
But it's not even that slow. It's
time.
like okay, bye. Okay, and then put the phone down. It's like it's not one. It's like 3 times.
Multiple.
Yeah, exactly. And are those support and resistance levels based on open range or high volume? No, these levels that I draw out are my own way of looking at the charts. So I have a rather specific way of looking at it. I look at engulfing candles, and I look at what I just define as liquidity levels. So inside bars, an example of one is this one right here on the 1 hour, which also happens to be on other time frames as well. So the high and the low haven't broken the high and the low of the immediately previous candle. You've got another one here, right? And then where the price hasn't come back to that level, that then therefore is, for me, major liquidity. So you've got an example of one there. The other example you have is this one here, which is a wickless candle. So if you look at the top of my screen where you've got the open, high, low, and close, where the open and the high, or the open and the low, or the close and the low, or the close and the high are exactly equal, that means that at that moment that that candle opened, price shot up and didn't even pull back down even for a second. So again, that's major liquidity for me in terms of my definition. And then the last one is when you have two highs or two lows which are perfectly equal. Again, I see that as major liquidity that price targets. And you'll very often see that it comes down and takes just a tiny, tiny tap into it to mitigate that price, and then price shoots off. So for me, the highest kind of probability setups are when you do have a zone marked out and you have liquidity in that zone, price comes down, takes the liquidity, and then you'll likely see a shoot up or a shoot down depending on what you're looking for.
I just want to take this, Rupert, man. We do either trade competitions between each other as well. Often we bring up personal accounts, whatever we're trading. We've also all been trading for a very long time. So I got like 3 personal brokers. I got C Trader, I got MetaTrader, I got Trade Locker, a whole bunch of accounts going across the board with different strategies, different approaches, long-term stuff, stocks, intraday trading, swing trades, the whole bit. So what P&L do you want? I will say, next time we have a trading competition, if you want to turn up, we'll include you, see how you go, turn up, show what you got, show what you got, and we'll see how you fare. All right, man.
There's the invite. Perfect equal low. So you can just see it there. It's just been formed on the half an hour. So it's possibly also on the 1 hour. No, it's not on the 1 hour, but it's on the half an hour. So you've got that perfect equal low. So suggesting that price is probably going to come lower. Next area that price might react from is going to be in this area here on the half an hour, where you've got this engulfing candle. So that's where I'd be looking for a reaction. I then just drill down and then look for what could price be coming to take in this area. If there's anything on the 5 minute, the 1 minute, any of those time frames. So yeah, any P&L would be good. Let's see some. Rupert, you want to see my P&L?
My bank account, like, you know, what do you mean?
My P&L right now.
We're gonna put this
my P&L right now. I've got no qualms about it. If this guy wants to jump in on the trolls, I'm down 9% on my funded account. There you go. I make no qualms about sharing that. Been funded 7 times, not had a payout. Just the way that it goes. But you know, unfortunately, despite what the markets might tell you or what the social media might tell you, trading is not a sprint, it's a marathon. And if you want to hit that consistency level, you've got to keep going. So yeah, we don't profess to be a signal channel here. We don't profess to be giving you tips or trades or anything like that. But we go through our analysis and we go through our trades and our ideas. Sometimes they work, sometimes they don't. So
exactly, we're just trying to give you guys a full scope. There's a bunch of traders in here. A lot of guys short term, some medium term, session to session, some scalping, some with swing trades, that kind of stuff. So we're just trying to give the overall outlook for each asset that you guys bring up. Give the upside, the downside, what the risks are, what we're seeing as far as macro fundamental, what's there to look out for, what are the risks, what are the benefits, and then give you guys an overall holistic view, and then you guys can make your own decision. That's the basic overall outlook we're trying to give. So
this was the trade that I was looking at earlier on Aussie yen, which I wasn't looking at the time. I see that it pushed down here. So in actual fact, waiting for it to test this wick, you can see how it it formed. It formed this structure here, so it wouldn't have been a valid trade. But that was the kind of the idea behind it. We're starting to see some bearish momentum come back in once again, and looking probably to see if we can retest this 15-minute candle, and see if maybe there's a reaction in and around this area here. So ideally something, I mean, you'd want to see something there, but theoretically it could be anywhere in that space that you see a structure form for buys potentially on Aussie yen. So Denman game.
Oh, sorry.
Yeah, go on.
I was just gonna say, where were we? This guy, yeah, dude. If you're making that many trades a day, no way you're gonna do that without an EA, right? Any, quality trades, nothing. You'd have to be running, an EA with particularly like high frequency trading type outlook, very short term, dipping in and out of the market, probably hedging, reverse hedging, back and forth. Definitely EA for that number of trades. So.
Mushad, if you want to get banned, keep spamming the chat. Is Perry your father? Who's Perry?
Who's Perry? I don't know who Perry is.
Don't know. Do you know? I do love trolls. I really. If I'm in the right mood, I do love a good troll.
Good call out's always fun.
It's like, oh, dude, congratulations! You jumped into our chat and you threw some insults. Well done.
Turn up for 3 seconds.
Exactly. Need analysis of Aussie, New Zealand. Aussie, New Zealand. I wouldn't be touching with the barge pole right now because they're just going to cancel each other out because they're both weak. I don't know what you think, LJ, but I'm not interested in that pair right now.
Yeah, I was going to say I'd wait for today to flush out. So this was the basically the fib channel we worked out before. So you get a somewhat retrace to the 38%, and then see if we get an extension from that down to 50, 61.8, and then see how we fare there. Typically, when you get these kind of moves on the Aussie dollar, New Zealand dollar, they tend to hold those levels, consolidate, and often run a bit higher before actually petering out and then coming off. So I would wait until you get a better confirmation of the high point for this to pull back before that. So I would not be touching Aussie NZD for today. I'd wait until see where we are tomorrow and see the reactions from the AUD dollar and New Zealand dollar and see the relative outperformance from those two, and then potentially get a cross comparison with that with the Aussie NZD, and then take a position.
Yeah.
So
exactly this, Maya. Unless you got free commissions, which actually you could do on the indices, you wouldn't have to pay the commissions, but yeah, you got.
Or sometimes you get rebates for trading high volume, right, with HFT, that kind of stuff, with bots that you can actually make it work per se.
Yeah, I know exactly, Oracle. It's just, but that's why, there's some channels that they'll just ban these people straight away. I much prefer highlight them and say, "Oh, look, here's a troll. Welcome." And generally speaking, the chat then goes, "Dude, you're a dickhead. Jog on." Those of you looking to buy gold right now, please don't do it. Please don't do it. It's already on the move. Don't try and jump into a moving train. Let it stop, let it think, and then look for an entry. Right now, it's come into another zone where previously it has reacted from, right? So previously, where we are right now was a 2-hour engulfing bearish candle that didn't hold. So there are orders sat there for sellers. So I would be very, very, very cautious about trying to buy gold right now. Very, very cautious.
I wait for that high move up here before seeing gold shorts. So you got this cluster up here, forget a box, within this portion where we fell out yesterday. So you can see we had this channel formed. That was my freehand channel drawn. Came outside of that, ran right down to the Asia lows, We then came back up, tested the underside of the channel, and then fell off through the rest of New York. So right now, we're then retracing that. I would wait until you get up until that top cluster of liquidity from where we fell down from before any consideration for new entries. Obviously, you could take some kind of scalp, long here coming up to there, right? Just like we've had, you always get a bit of back and forth. It's gold as well, so you can very easily get wicked out. Your best bet is to wait for that higher move up to the top end, and then short from there would be the preferred option. We did just have a question about the NAS and how to use the options for that. So we'll go over to the NAS real quick. This is a trade I'm still in on the NAS from London time. So right now we're seeing a bit of move up. How you use the option is, this is optioncharts.io, right? And if we go, I'll walk you through it. You go to main page, comes up like this. You scroll down, go to index. You can see down here, we got everything listed, whatever you want. We go to NASDAQ 100 in this case. There's a premium version, which gives you more data. You get the implied volatility, all that kind of stuff. We don't need that right now. Go to option charts. You go down here to expected move and probability distribution. They're just two ways of looking at it. So expected move, if you go to probability distribution, it just gives you a nice bell curve there. It's basically the 0 DT options for today coming to New York. So 0 days to expiry for the options. And what we had was 23,403. So often when you get a deviation from that 23,403 price up here today is right around these top levels. So anytime you get a deviation from that price point in the spot price, you can look to return price, whether it's short or long, to that midpoint, right? Because you get spot gamma pulling price to there, coming into New York open. Those options roll through. You tend to get gravity pulling price to there per the options providers. They have to potentially fulfill those orders. And depending on just how many orders there are and other macro fundamental stuff going on at the same time, sometimes news will distort that. But you tend to get a bit of gravity to that level. And then once they clear, the NASDAQ will run either to the high side or to the low side. So just like we saw last night, it gravitated to that price here, and then we had a full collapse, right? And then we ran on and ran on. So prior to New York, you can often position looking for price to meet that point. Right now, that would be where my T1 is on this position. I'm looking for us to meet that. I will see how we contend there. And if we contend nicely, price holds up, I will hold the position high to go to the T2 and a retracement to the underside of this channel. If not, that's when I will see the position as having failed and just take profit at the T1 and then look for a re-entry or potential a reversal after that. So there you go.
Excellent stuff. Alrighty, guys, we've got Victor waiting in the background, and Jonatan is sat there trolling us in the chat as well, ready to give you the second word. So we will be right back after this with the Mars Trader, who I believe has also been looking for a potential breakout, which, funnily enough, happens to be the second word. So, yeah, right after this, Victor will be on, and he'll talk you through his Euro USD break and retest that he was looking at. See you soon, guys. Take it easy.
Cheers, guys. See you tomorrow.
Hi there. This is starting. This is the continuation of the next segment. Let's see. I see. Let me check our my Zoom. I think it is a bit off. Let me double check that. How is everyone doing in the meantime? And yes, Mike, thank you for spilling the beans to telling the now there is no surprise element to what I was going to tell you guys. I'm just kidding. It is there is still a lot to discuss. Let's see if I can get the screen a bit a bit better. I don't know about you, but I prefer a bit more zoomed out, so you can actually see some more of. Doesn't see my face as big as it's currently at. So, how is everyone? It's the 20th, Wednesday. Great day to catch a nice move. We have FOMC coming up later today. It's not a great mover, as in immediate release of the exact moment, but in what am I in the exact moment the minutes are released. Usually you don't see a huge move, but in the hours afterwards, it can be a driver for some prolonged move, so you want to be aware of that. I'm going to show that on my screen, on our screen, as looking at what we're facing today, and that's of course the FOMC, the release of the minutes. And there's some, I remember not long ago, Lagarde was speaking, and that made a huge difference. Obviously, that's not going to happen all the time, but anytime these high ranked individuals, high positioned policymakers are speaking, you have that opportunity or risk, or however you want to see that, and you that's something you want to be looking at as well. Also, we had Kiwi rate decision earlier in the Asian session, and that moved the market quite some, if you haven't noticed. And I will go through them. Most of them have been all rose by the time London opened. Let's take a look at them. For example, a Kiwi dollar. What am I typing? Kiwi dollar. Right at the beginning, right after the beginning of the London session, it already had moved quite some more. Right, if you look at it in terms of the normal, normal is not the right word. Average range in terms of the ATR, measured by the ATR, you can see that the average range on the daily is currently hovering around 51. And today, as we came in, right, as we came in after the news, so basically the range of the news, by the time not New York, London opened, it was already 76, right? So that's what, 150 already. And that's a common theme for, not surprisingly, of course, with Kiwi. One pair stands out, and that is this one, which is the Aussie dollar Kiwi. We can see in comparison to the daily ATR, right? So that's a 41, and if you measure what's been happening, if you measure what the range has been so far today, right? The low of the day, if you measure that, 41, and by the time London opened, it was let's see, how much is this? I got the wrong tool. Instead of the measuring stick, I got there we go, 123 pips instead of 41. That's actually if that's 300%, right? So that's a huge deviation from normal. That's why we want to know about these interest rate decision before. Just imagine if you're on the wrong side of the market when these news come out. It doesn't matter if you're a swing trader or not. You want to know these things in advance, so you can just double check if everything is according to your plan. If it goes in your favor, obviously that's not a risk. That's no one is gonna complain about that, but it's all about the risk, the times that it does not go in your favor. So let's look at the chat. Let's see who is here in our chat today. Let's see, we have Ziggs. How are you doing, Ziggs? and as well as Atish. I see Razdul, great. Louise, as usual, NX Master, Sam, and many, many others. Annie, Ruth, thank you all for coming and joining us today. It feels, when I see all these regulars, it feels like a gathering of friends. It's makes me a bit warm inside thinking about it. That's nice. Thank you for all of you saying hello there, and many others that I may have. I'm pretty sure I missed a couple more in the chat. Noura as well. Um, there, Tamil has a question here. Hi there, Henry. Thank you for being here. Henry is a pillar. Is a pillar. He's standing strong and steady fast in our community. That's something to you know. That's something to our community that is always there, and that's worthy of some recognition for sure. And don't be jealous, the rest of you. I mean, there are many others, Noura as well. You have been, been coming onto our streams so often, and so many others that may, I may not, I may not mention, and not the least, Kim. Hi, hi, hi. How are you doing? All right, so let's take a look at if you guys have any questions you want me to discuss, any pair you want me to take a look at, or you have a, I don't know, a topic you want to discuss, you want to have, my opinion. It's just an opinion. I would like to say I'm no expert, but then again, I do have my experience, and that should count for something. But in the end, it's just an opinion, and it's gonna be imperfect, but maybe it may be able to help you navigate through your situation, level you up, perhaps, or I don't know, might just be helpful having a different perspective on the same topic. Okay, so let's check here. We have one Tamil asking how to avoid FOMO entries when BTC breaks out in trend. I don't trade BTC to begin with, so I think actually let me check. I yes, okay. Let me check. I don't trade BTC. I don't trade it. I do invest in BTC and other crypto coins. So I wouldn't be able to tell you in BTC in specific, but I believe it's pretty much the same in any asset, right? There are some nuances, but basically any asset that is very trendy, very impulsive, like gold, is or sometimes NASDAQ, sometimes the equities is unstoppable. They're absolute juggernaut in one direction. So when that happens, um, and the forex pairs as well. I mean, when you have big news on the lower time frame, they're very similar, right? They're high, a lot of momentum. Not looking back, the retraces are very shallow. To me, the only way to get in, if you didn't get the actual entry, and what I was going to say is the following: I don't trade BTC in specific, but it doesn't really matter what asset is. The point is to recognize what kind of type of asset BTC is. I mean the price action, not the underlying characteristics of the actual asset. But I mean, how it moves, how it retraces, how often does it come back to these structures it breaks from, right? These characteristics is different from asset to asset, but if you compare them with high momentum and very trendy assets, they're roughly the same. So BTC and in general, let me trying to get out of my words right there. But if you have a market that is perhaps, let me get a screen that is a bit more clean. The meantime, I believe I need to close some background here because I see that it is somewhat perhaps laggy for you guys. I'm not sure. Let me know in the chat if that is the case. All right. So in Forex, for example, when you have a certain breakout, there's a lot of chances, not all the time, right? But generally, Forex, many of those pairs are not as trendy as the equity sometimes can be, or BTC or gold, and they are, momentum can be strong in lower time frames, but you will still find them to be retracing quite some, right, in comparison to other assets. And it means that you still, even though you may have a strong trend in these assets on Forex, for example, because it's less, as I said, less impulsive, less explosive, usually on the higher time frame. What will happen is that even if you miss a breakout, right? Typically, there is a good chance that you will get another entry, right? Just by waiting for price to come back, perhaps to the initial right structure that it went from, that impulsed it to break out, or perhaps something, perhaps something in the midline. They're meant that this happens a lot more on Forex than on those momentum assets. And what you see with these assets, which are much more explosive, that they typically do not come back to retrace these areas. So what will happen is that they will have very little, they will give you very little chances of catching the move back, as it is just leaving you behind. So responsibly, there is just one way of doing it, is by still using the structures that you would normally use, right? That's the responsible way to get in when these moves have already happened, right? Even if it's just a little bit shallow retracements, that's the way to trade them. The only thing is that the whole risk reward ratio will completely change, and it may not be one fit anymore within the framework of how you trade, or it simply may not be worth it anymore, right? Because the risk becomes so much bigger, while the chances of it continuing are perhaps not as high, right? So but this is the only responsible way of doing it, is by actually keeping the stop loss where you would have had it had you actually caught perhaps the breakout. Another thing is, if you actually have, and the other way to do this is to wait for price to come to some kind of a demand zone, and then look for an entry. But that doesn't happen all the time with these pairs, right? So it could be something like this, and then you can, of course, be as tight as possible on your structures, because you actually have a demand zone. And that's why that's the whole reason why I wait for these retests, is that I can then get my tight areas, and actually it's much tighter than that, because I go top down to lower time frames and catch them as low as tight as possible. So when you're feeling that FOMO, um, it's fine, and there are sometimes the opportunity is diminishing. Sometimes there's still opportunity there, Tamil, right? So if you put the stop at the place you would have had it, where it actually makes sense in terms of structure, price action, and so forth, and it still makes sense in terms of risk reward ratio and the win rate, or assumed win rate, because you don't know this in advance, then I would still take it. Even if it's not as great anymore, it may still be good, not great, but still good. Okay. But what I wouldn't do is, let's say you typically have I don't know, a 10 pip or 20, 15 pip, and the market already moved quite a lot. I wouldn't be trying to do it with a very tight, or the same stop, without having some structural reason to do so, right? Just because it left, it is not a free ticket for you to take that trade, unless you have reasons, structures, whatever it is that you use, that tell you that this is a good place. It's likely to be, not retrace a whole lot more, and the chances of it continuing are quite high. Doing that just on just the fact that you miss a trade, that's not the right way to enter the trade. Then it's much better to just let it go and trade another day. And that holds true for not only BTC, as I said, for all pairs, especially those that are do not come back as easily. All right, so let's check. Let's check the chat to see FOMO army. I hope I like the humor, which is always good. But I hope you have it in control, because obviously it's not something you want to have too strong. That feeling that you have to take a trade, that it's your trade, the market owes it to you, and it doesn't matter, it left the area of interest, you're still gonna chase it. Those are, I say from experience, those are not great. They're not good for your trading, not at all. So you gotta know that in advance. Hi, Mariana, how are you doing? Thank you for coming in. The first word, I am not able to tell you. Not able to tell you because the whole idea is that you stick with us throughout the whole stream. So you and paying attention, perhaps writing it down, so you you catch it yourself. I cannot catch the ball for you. I just can tell you, what to do. Stick with us the whole day, and you will hear all three of them. And that's it. We got to play by the rules. So no shortcuts, no shortcuts at all. All right. Yes. Yes. I'm just gonna answer yes. Which one? Yes. Awesome. Let's see what else we have here. Tamil has another question. Tamil, thank you for these questions. I appreciate your effort, and I say keep them going, keep them coming, because that's how we learn. In the very essence of learning, it's by making, asking these questions, asking yourself why, what. That's why little kids, they learn so much, right? They have that curiosity about everything around them. Why, are gorillas a certain way, for example? Why is a giraffe whatever? You get the point, right? So I totally want to say you keep those questions coming. How the market reacts differently to hawkish and dovish FOMC minutes. In terms of, I don't want to go into the the interpretation of the minutes and how the market perceive things, simply because that's not something I use. I don't. That's not something I practice. I only watch the chart. I know it sounds perhaps boring. You were expecting some kind of a elaborate, layered answer. Sorry, I don't have that for you. I just trade price action. I only want to know when these things are coming out, and whatever I'm going to be doing, whatever read I will have on the market will depend on the market. I may have an opinion on other things, but those are just opinions. They're not inputs to my strategy. Why? Because when I build the system, right, the strategy, when I collected the data, my opinion was not part of the input. And if I want to have the same results as my back-tested results, my results I've been having so far, or in any case, if I don't have the forward testing data yet, if I want to have the same results that I collected, then I need to do the same process, right? That's how it works. So I didn't use them before. my opinions, and I'm not going to do that in the future as well. Maybe that could change, but opinions is a little bit less objective, and that's something that I have personally. I'm a little bit uncomfortable using, less objective inputs. They can still be very useful, obviously, if you have a good read on these issues or these things, these developments. Then it can greatly help you to find when the market is not, is deviating, is diverging from what it should be doing based on the fundamentals. So in advance, what's happening. But I'm not trading like that, so I wouldn't. I'm not the right person to help you with that. But thank you for the question. Thank you a lot. Let's see what else we have. Let's check. Yeah, I've tried it in the past a long time ago to use to have a go at trying to incorporate it in my trading style way before actually I was developing my system. So, but my conclusion was that the variation, sometimes it helps, sometimes it doesn't, and I didn't like to introduce another variable that will cause more variation in my process and my results. So, and I wasn't very good at it, to be fair. So it's not something uh, I use. So whatever information I get, I use it on. Uh, I use it on from the chart, and that's all I use. Okay, Annex Master. Man, you guys are amazing. You guys are truly amazing. Um, with all these questions, I mean, and I really enjoy that. We'll come to the market. Let's check before we continue with this question. Let me check if there's something that we should be looking for, because on GU, I know we are in a fresh order block, and I'm looking for a possible upwards move on EU, and that typically means that we could have the same on GU as well. And I'll tell you all about it during our stream. Meanwhile, if you are watching us, it means you're interested, and if you're getting, what you came for, then please consider hit the like button. Subscribe to the channel if you haven't done so. It's a little effort, but it's highly appreciated. All right, so we do have a fresh order block being retested. Nothing on the H2 and nothing on the H1. So nothing to be looking at yet. Actually, let me double check that, because there is actually yes, there is an order block here, which I did not mark yet. And that's exactly where you want to be trading. Let me double check that. Yes, it is. So let's go to the H. That's exactly the area. Let me see if this is something that I interested in, and perhaps we can take a trade live with you guys as well. I'm not going to show everything because I'm a little bit private with a couple of characteristics of the trade, but I can definitely take a trade. Let's see if this is valid. 1, 2, 3. Yes, this is a nice. So I'm going to take a trade here. This is a bit off. Normally, I see them coming. I'm not going to put my stop exactly where I put it on or perhaps I will, because I do have the the position open in the background. Not a position. I mean let me put it right here. I'm gonna show my chart, so I'm gonna switch to. Let's see if I can do that. Going to check if I can change my. I don't think I can. Can I? No, I don't think I can. I need to. I'll have to do it this way, but it doesn't matter. We can still do it. 6 to. All right, so that's the That's the trade. Let's see if I can share this. Yes. All right, so I'm gonna share with you guys the trade, and there we go. That's the let's see if I can hopefully I'm not sharing sound, because if I am, and there isn't actually a lot to let's see if all right, we have on GU. And before I take this trade, I know I'm let's double check a few things before I do. Have a couple of things I need to check before I get into the trade, and everything is okay. All right, so I'm going to take the trade on GU, and this is normally I would be getting in on a much just going to put it here. This is not the actual. So on my other accounts, because I'm showing this, I'm not showing my other account stops. So I'm going to be taking the trade on let me put it to let me double check this. So let's go to the higher time frame to see where we could be targeting. So the first initial area would be there, right? So that's one thing, but that's too small. That's usually too small for me. Let's see. Yeah, that is definitely too small. So I will have to target something else. So let's see. We have something like that. And on the daily, that's definitely all right. So I'm gonna put it with I don't know. Let's double check some things here. There we go. Nice movement right there. Let's see if that's hold. I'm gonna put it a couple of pips below that swing low, and if it holds, then it holds, and if not, then so be it. Right? That's how you completely detach from the results, the P&L. Just do your thing. Have rules, obviously, and not be too fixed to or fixed to the yeah, okay, so fixed to the to the result. All right, we can leave that on, and we'll see how it continues through our stream. So that's going to be that's the trade right there. I have it here. Let's see, right there. That's the trade I just opened. 2 lots. It is because I'm streaming, I'm not doing it exactly the way that I would be doing it, although this is the trade that I'm taking on on my other accounts as well. But I mean, there are some differences, as I just said, of differences that I would not be doing. All right, so I also had a couple of trades on EU that I took earlier. These are the trades you see here are scalps that I took earlier, and that's why it's all grouped up in like that. And I'm targeting, and I'll talk all about it in later on. I'm expecting at least a little pop. Expecting is a tricky word. I think there is a good opportunity for where I can on EU. It already happened where I can define my risk, and there is a lot of upside if indeed the market were to move around, move in my direction. All right, so I'm gonna switch back. There is no other way, I think, other than having a blank screen in the meantime. So let's see if, all right, there we go. Okay, so the area where you would be interested is that order block, right? Then you go to the lower time frames to find the, that order block, for example, on the 1 minute with a tight, much tighter area, and then you can go and target structures that make sense, either the lower border of that daily order block, for example, or some other. which I believe this is what I'm targeting on the account as well. The account I just show you guys right here. Let me check another thing, because this is, yes, I do see, for those who are wondering, I do see, I understand that the my assumption is that the market is going from one level to the other, meaning from that daily to that to this daily above us, the fresh one, which was created when the market created this daily, which is part of a quasi, and is likely to be going to another structure in the same direction. But it can do, it can still have this movement on its way, right? There's nothing stopping it from making having a little pop before the actual move, the continuation that is. And if it continues and I lose, that's fine. That's all part of the game. You can't win them all. Just keep your losses checked, and make sure that you are just following the plan and following what you back tested, and the validated plan, basically. Okay, so let me go back to the chat and see what you guys are being up to in the meantime. All right, so we had the question: overconfidence after profits. How can I deal with overconfidence? So it's right here in on the screen. Well, what would I say to that? I know I've said it many times, but to me it comes down to awareness, being mindful, right? Because there's nothing wrong about being confident or feeling good after having profits. That's good. We should celebrate that. We should, not shy away from those feelings, because I think it's something positive. It makes you feel great. So, but it's the key thing is to have it in balance, right? Not letting it affect your behavior. And in order for you to understand whether or not it is appropriate, whether it is not too much of a confidence, meaning overconfidence, you need to have awareness, right? So, and awareness is something you have to develop. In my case, I had no choice, because I saw that things that I was doing wrong, like overconfidence, for sure, was one of them. I would, like much of you, I would, be less tolerant, or more tolerant for risk, meaning be taking more risk just because I had some winners, right? Some good trades. I catch something, it felt me great. It felt me feel great. It made me feel great, and I would, I don't know, put extra trades on, increase my risk, do all these things that I should not be doing, and not being mindful that I'm actually deviating from the strategy, not being mindful that I'm seeing things too as an optimist, too positive, like uh, underestimating the risk and overestimating the benefit. Right? That's one of the things that I saw that I was doing. I would be thinking about how much the profit would be, and I would not be thinking, okay, if this turns out wrong, I would lose X amount. I would be thinking about the profits before the risk, and that's a typical sign for me, and I think for many, that you're you're not aware. You're going either on, maybe not completely on tail, but you're going in that direction in any case, and you should be correcting yourself. You should spot that before it actually develops into a more destructive action and behavior, and even habits afterwards. So, and the one thing that helps you is being aware, being mindful of whatever is happening in your mind, your thoughts, and whatever you're doing, right? Just by observing, taking a minute or a few to stop and see if you are, mentally, and if you're following the plan. Do that regularly, right? Everyone is different, but do that multiple times during your sessions, your whatever long, it does not matter, whatever long these sessions are, your trading sessions, I mean. Break them down in, I don't know, in a number of periods, and have either an alarm if you need to force you to stop and think about everything you're doing, right? If you have, and it's going to be hard, but if you're disciplined about it, you go through, do a mental checklist of how you're feeling, what are you doing, are you following the plan, yes or no. All of these things will help you catch yourself doing things that are product of overconfidence, right? So to me, the bottom line is being aware, and there are many techniques you can employ to put that into practice. But basically, that's what it is, right? Seeing yourself, you're putting a mirror, you're forcing a stop to put a mirror, and you reflect upon yourself, your present self, and spotting if there's any deviation from what it should be. But great question, NX Master. Awesome, good one. We have someone asking for Aussie dollar as well, and I will put it on the list, and we can certainly take a look at it, as well as NAS. Someone asking. Someone is asking about his or her name, a D, not showing on a roulette today or yesterday. I would not be able to. I think I'm not sure, but I think I haven't seen the roulette, by the way. But I think there are a lot of names in these raffles, and not all of them are shown. Right? They're all in there, but they're only, it's an animation, and probably is not actually showing all of them. But that does not mean that your name is not one of them. If you got your confirmation, I have no reason to doubt that you're. That's why they send the confirmation, right, to confirm that your name is in the drawing. So I wouldn't be too imagine if all the names were to be shown. That could be a long time. Okay, all right. So yes, the best thing, and this is how I deal with this, right? Tamil, you're asking that you see that you have losing, or you have, your trades go to stop loss during these data releases, and that's a very good observation. Something you should definitely do something about it. If you see any pattern, not only talking about chart patterns, right? Things you see on the chart, but any patterns in your data, in your trades, your job as a trader is is pattern recognition, literally everywhere, right? So not only on the chart, but also on your trades. If you see this pattern, that with data releases you have losses, you've got to do something with it, right? One of the ways to check is go into your backtest. Hopefully you have a lot of those trades during your backtest, and see, pinpoint which of them are related to data releases, and see how your performance was in that set of data during these data releases. And you might find out that perhaps your strategy needs some adaptation, because data releases might be something that's not conducive of is not conducive to profits for you, right? Because whatever way you trade may not be compatible with these data releases, probably because the volatility that comes into play, I would assume, and your stop is too close perhaps to these areas. So whatever it is, I don't know your system, so there's no way I can break it down and tell you exactly, specifically to you, but it's something you can check, you can score. And once you have the observation of what the data releases, and perhaps there's also a, um, a distinction between what kind of data releases. Not all of them are equal, right? So you might find, if you tag each one of them, okay, this was CPI, this was interest rate decision, this was NFP, and so on, and you will find that some of them will have an effect and others will not have the effect. So one thing is this distinction between which one is important or relevant for your pair, for your strategy to be looking at, and the other one is, once you have observed that it's something that is hurting you, right, you can then devise a rule to filter out um, that unwanted result. Right, one thing you could do is close the position before, maybe. Or the other thing you could do is perhaps, well, you could hedge it, but I don't know if that's, I don't know what level you are in trading. It's not for everyone and not for every program as well, right? But you could hedge it, have a market neutral exposure, meaning when you have a perfect hedge, it does not matter if the market goes up or down, and you can safely navigate through a high impact situation. And then after that, you release the hedge and then you continue with your trade. But don't go do it if you don't know what I'm talking about. Especially then, you should not be doing any hedges or anything like that. All right, so let's continue here. ¿Por qué usa máscara? Felipe, how are you doing, Felipe? Thank you for the question. The mask is the reason I am able to call myself the mask trader. Very simple, very logical, right? Muy lógico. All right, so let's check again. Let's see. Okay, so we have Aussie dollar, NX saying gold might be selling. All right, perfect. Let's take a look at gold in that case. Perfect. We have, I'm going to check on EU as well as GU. That's a very nice, this is EU. You can see how I had an entry over here. These entry lines are not necessarily the entry level, right? They're not literally the entry level, nor the stops are the exact stops that I'm using. These are just to show you in general, where I'm interested to enter. These are already entered, but I'm just telling you, don't take it literally as the entries levels. So that's one area, and that was based on the quasi we have right here. And we have another area that was retested right there, and that's the reason that I entered on that trade, and it moved out very nicely. I'm looking for this trade. I'm going to talk about it later on, the possibility of a move, and I'll tell you why I'm targeting this. All about that after we check some other pairs. All right. All right. Thank you, Felipe. Thank you for your support. No problem. Saludos. All right. So let's take a look at gold. Who of you are in a gold trade today? Let us know in the chat. Share with us. Don't be shy. Share with us your trade, your entry, what you're targeting. If you don't mind your stops, or somewhere roughly where your stops are. Some people are very selective and private about their stops. I'm one of them. So guilty as charged. But share it if you don't mind. Perhaps you're not as sensitive on your stops as I am. So share them. Do share them. All right, so let's take a look at gold. Rasood is typing. Courtney is holding a long on gold. Very good. Please tell us from when. Like, is this an intraday trade or something you've been holding for a couple of months? Because it's been on a bull run from a long, long time. Actually, from the late 70s. Just kidding, but it's actually true. Gold has been well, not exactly on a bull run since then, but you can see if you go all the way back. I don't know if this. I've got a couple of. Now I'm moving things here. Let me see. Okay, all right. So exposing. These are messages from our Discord community. This price feed did not go all the way to the 70s, but as you can see, we've been in a huge multi-year bull run in gold. So it wouldn't be completely crazy to be in from, I don't know, from 10 years ago. It wouldn't be a trade, that would be an investment, but still. I remember this move. I don't know if you guys were trading back then, but I remember this move when gold was, you couldn't do, there was nothing, you couldn't you couldn't lose trading gold. The only thing you had to do is go long. That's it. Go long, and preferably don't put the stops too close by. But you could do it with the eyes closed. It wouldn't matter what day of the week, what price action was doing. Just buy, just hit buy, and the thing would just eventually continue to go up and up and up. I don't know if you knew about if you guys were around back then. I was trading back then, and that's when I started trading. Actually, I didn't know anything about trading, and I just using simple logic, I saw the thing going up, and I use, I think, EMAs or MAs, whatever I was doing back then, and bought it at each time it came to one of these moving averages, and I made money over and over and over again. And I thought I was a genius. Has that happened to you? Let us know in the chat. Let me know in the chat if that has happened to you. And I thought, man, I'm gonna quit whatever I was doing back then, and I'm gonna do trading for the rest of my life. I got bitten by the bug, trading bug, and I made some decent money. I took, I think, 1,000 or so, and I drove it up to 36,000 euros in a little less than a year. And I thought, this is it. I'm not going to do anything else. I'm going to quit whatever I was doing back then, and I'm going to be doing trading for the rest of my life. Little did I know that wasn't me. That wasn't me being very good at trading. That was just the market being on a bull run. And I ended up losing a large portion of that money before I realized, it wasn't me. It wasn't me. It was just the market. Exactly, Matthew. I thought I was genius. I sincerely believed I was. Hasn't that happened to you? I mean, now I feel, I was super naive, but back then I didn't know better, right? I thought, what other proof did I need than the money? I was going to bed, and I remember one day it was like 27,000 or whatever it was, and I woke up in the middle of the night, and the thing was at 30 the next day, or when I went to bed, it was 32, and then it was 35 or something like that. And I thought, whoa, this is so easy. I must be very good at it. I had all the proof, all the evidence, but of course that's not true, right? It was just the market going up, and it was so easy to make money. It's eventually I couldn't reproduce the same results, and I quit trading for some time because I was frustrated. I found out I wasn't a genius after all, and I needed another approach, and I left trading for a couple of years. Easy money, indeed, easy money. Exactly, Fabian. Exactly. That was the worst thing that could have. That's the worst way to start your trading career. Thinking you've got it all figured while you don't know anything. And back then YouTube didn't have information it now has. It was back then more of a music platform, and not what it is nowadays. And the internet did have, of course, information, but not as not nearly as it is today. So I didn't know better, and there wasn't a lot of and I actually, without going into details, what happened was I came back to the market, years later, and did the work, put in the hours, and eventually I'm here. But the beginning, it was very, very, very frustrating to see, to realize that you're not that good. You're not that good. Let's face it. Just be. It's a little smack. A slap in your face. It's not you. It's just the market. All right. So let's go to the market. Let's go to gold. Little side story right there. Um, that experience, though, even though it's the worst way to start trading, that experience planted a seed in me that never left. Right? I knew I had to come back. I saw it as a challenge. I had to come back and do it, make it work. And Yeah, so it's not all bad in the end. It's actually not bad at all, but it is the worst way to start trading. I wasn't at all good at risk management back then, at all. All right, let's go to the present time. Let's check the not the WhatsApp. Let's check the chat. This is our WhatsApp. All right, so okay, so we have a bearish order block was created already, that is fresh on the higher time frame, the monthly, that is. And but you see how weak the market is, right? The market just right after creating it has gone to retest that. That's a sign, and it's not just a little bit, but more than 50%, a lot more than 50%. So that's something you have to definitely take into account. Then you have, let's go, other than that, there isn't anything to see, right? So we're retesting this order block. And the next structure on the monthly time frame is way, way below. So there isn't anything. If market were to come down from here, there isn't anything to stop price all the way to would be the first order block, and that would be the first, what I would call the this is a breakout line that will probably cause price to react. But this is something that is a little bit scary, a little bit of a fear of heights. If you don't build your case, then you definitely will feel that. On the weekly, let's go a couple of, not a couple, just one step down in the time frames. What you can see is that, yes, the market has been going sideways for some time, right? You can see that. However, you can also see that sideways movement lately has been forming an upwards trend, right? That's the undertone, right? That's what's happening in between, or between the lines, even though it's quite clear that the market is very, very strong. And it's quite likely we could continue to have higher and higher gold prices. Although we could, even though I don't use fundamentals, we all know that one of the drivers of gold is, of course, conflicts, which brings extra risk to the market, to the financial markets, and to countries in general. So if a big, relevant, impactful conflict were to be resolved, and we all know that there are talks going on and negotiations possibly in the very near future, if that were to be resolved, then you would take away a little bit of the driver. That's not the only driver, but that's one of the drivers in gold. So you could see weakness in coming in because of that. But that's on the fundamental side. In terms of the actual asset, or the actual price action, what we have is we have bullish structures being created, respected nicely, and mitigated in the process, and having the price following the that same buy structure, or buy order flow, right? Where you have the order block being created, price comes back and moves, reacts, buyers are coming in and pushing price higher, and that happens over and over again, creating new structures. And that tells us that's basically the same expression of the fact that the market is still bullish, even though it had a monthly order block being created. On the weekly, it looks quite bullish. And it's been for some time already, right? Where you have bearish structures and bullish structures being created. However, on the daily, right? On the weekly, there hasn't been bearish structures until last week, and that's this structure, this weekly. This is not an outside bar, is it? No, it's not. That's an engulfing. And it's the first one since some time on this time frame. So that is something to consider. If price were to come back to this order block, right, and it's likely going to happen, when and if it comes back, you could look for alignment for lower time frame to catch that move, right? Even though I think eventually it's going to continue to go higher, you could still it could easily have some kind of a retrace before it actually, maybe on a second or even a third time, actually breaks and continues. There's no way to know that in advance, right? So that's the weekly fresh order block we need to take into account. The price is currently retesting a fresh weekly structure, and these are very tied to each other, so that makes it extra tricky. But basically, you want to be taking the trade from one level of one structure to the next. So basically, just from here to there. That's it, right? The first, that's the first target that you should be targeting. Let's go a little deeper on the daily. See what we got. We have on gold two opposing structures. Both of them have a quasi being a reversal pattern, right? That's the established downtrend. Neckline breaks it, goes back to one of the two order blocks where I have a possible entry on the daily time frame as well here, where you have the market coming back and reacting to this order block, right? This entry order block on the quasi does it for multiple times, and now it's doing it again. And the fact that we're now showing a bullish order block hasn't closed yet, but that's something that you want to be seeing. This could be the last touch it does to this entry order block before it continues, right? I know I just said there is a weekly there, and yes, you should take it into account and look for alignment and take the trade if it fits your strategy, your trade plan. But this is what the weekly and the daily are telling you. You have a daily quasi bullish, which sits on top of that weekly, not one, but two weekly structures telling you that buyers should and are getting in and reacting to price. And this is easily, perhaps not in a straight line, easily could be the next level we have before price eventually continue to higher levels. We don't predict, right? As traders, we don't predict. We don't know what's going to happen. But these patterns, they happen a lot of the times, and that's what the pattern is suggesting. Okay, do use it properly. It's a possible scenario, and that's the bullish scenario on gold, meaning today and also tomorrow, if we have a retest of that, let's assume that's going to close as a bullish engulfing. We have a retest of that daily structure that's market as such, right? You would be, the proper way to trade this would be, well, proper in my opinion, right? Would be to wait for price. Either you catch something today, that's quite early because it hasn't closed yet. And the other more appropriate way to do it is to wait for the close and wait for price to confirm there is an order block there, come back to retest it either right away or after a couple of bars, and there you find your quasi perhaps on the lower time frames that you can take and take the move to the moon. Well, I don't know that, but you get my point. And there are a couple of targets that I've been looking for or looking at based on these weekly, right? That's 300, 3,671. It's not to be exact. It's just I have to put it somewhere. But that's basically, that's the average, it's an area, it's not just one line. That's what I'm aiming. If price is using this pattern and does break, close above, and has that follow through movement, then to me it makes all the sense that it has a very good chance of reaching that level. Okay, it's just a projection. I don't know if it's actually going to happen. Let's see the chat in the meantime. Don't want to leave the chat behind. Let's see. Someone saying the euro pound is possible sell on 1 hour. We could take a look at that as well if time permits. In the meantime, as I'm reading through the chat, consider a like on our channel on this stream. Subscribe, join the club, subscribe to the channel. It's completely free to subscribe to us. Free but not worthless. It has a lot of value to you. That's what I believe. I strongly believe it can help you being exposed to other traders who are funded, who are profitable, consistent. It's not a competition who is, it's not about me. It's about showing, helping others. All right. Okay. So I have a couple of messages that we could look at in the meantime. Buys and sells in the next 5 minutes. That was the 5ers. Oh, who is this? This is 5ers Portuguese. This is it? Are you? All right, let's take a look at this. Is it Pedro or who is it? Let's take a look at all right, so let's continue with the analysis. We did discuss that bullish scenario, which is very likely for multiple reasons. As I said, right, you could see the trend line. That's not the only reason, but you could see the trend line being very very trendy and upwards movement, right? And you, let's see here. That's one thing. You have the accumulation of the weekly order block being on top of each other. You have the daily quasi that I just pointed out, breaking that neckline, coming back to these order blocks, these entry order blocks, and reacting currently to it. At least it's showing a reaction. We'll have to wait for it to close before we can actually make a conclusion and take action on it. But we have multiple reasons, from maybe not the monthly, but the weekly, the daily, and perhaps not perhaps, I know for a fact on the lower time frames as well, it hasn't reached the area that I was interested based on the H4, but you can still look for multiple reasons, right, to get in. There was one in the past. I actually took a trade from this, maybe not on that account, but on another. I did do it on another one of my accounts, and that's based on this order block in here. But I'm waiting for price to come back to this structure and to react. And if not, maybe it could start to create a new structure, maybe new order blocks on the daily, and then you can use the same way that I just indicated. Wait for price to close above, and the neckline you could use different quasis right here. This is on the H4. Wait for the quasi to be formed. This would be basically the structure. There we have it. The established downtrend breaks the neckline and might or might not come back for that retracement. That's one entry that would make sense for myself if price were to come back to this structure. Let's take a look. All right, so that's one. And on the lower time frames, I would have to wait for the H4 to take to come back as well, right? But that's not the only way to trade. On other time frames, I don't see any other area. There is one here that I could certainly consider, right? So that would be on the H1, right? So if price comes back to this, then well, it will have to have an H4 as well. So that's not enough for me, but I'll leave it open. I can take a scalp from here if it doesn't comply completely to the set of rules that I have. And if not, then you could also use the upper border of that quasi or that order block, and see if it forms it has a reaction and forms a reversal pattern when it, not right now, but after it takes out the neckline and then comes back to perhaps this reaction and continue, or when it comes back to perhaps that region or perhaps even lower, right? Or it might create a new pattern. That's always possible, right? It creates a new reversal on an area that's nothing from the left, but it's still giving you all the reasons to get in. So that would be something that I would be interested in. I personally, the question that we had was, thank you, Pedro. You make me blush. All right. So there was one question about gold in the next 5 minutes. That was 6 minutes ago. So let's take a look. I wouldn't be, taking a trade here, but that's just me. On the 5, yeah, because I think, I don't trade this way, so I'm not interested in getting in right here, but I would want to wait to see price to take out that neckline first, and then I would want to price to then retrace into something that makes sense as it moves out. That might happen tonight with FOMC minutes, right? Might happen in Asia session. You see that often when FOMC comes out, it doesn't have the explosive moves right away, but after the ensuing hours, it will start moving and getting momentum. And when it gets momentum, it really, really moves, right? But so that could happen in Asian session or perhaps just tomorrow. Who knows? I have no timeline on that, not specific timeline, but I know it can certainly happen on the back of FOMC minutes being released. So that's something that but I would only be interested if the market gives me a reason, right? Remember, we talked about that at the beginning of the stream. We want to be taking a long, if you're considering a long, you want to be taking it either in a demand zone or after it came back, retraces back into a demand zone and is looking as if it's going to reverse and go in the opposite direction. Those are the best area you want to be catching a move. Either it's with the trend or ranging, it does not matter. You still want to be going long from a demand zone. Why? Because that's, the demand zone is the structure that it's supposed to respect, and that's the whole idea. You get in close to a level where it's supposed to hold, supposed to react from, as it gets, it has that reaction. You get in, put your stops below that same structure, or perhaps two lines of defense further down, and then you go long on that structure. That's how I would recommend everyone going long on. All right, so that's basic supply and demand, ideas. So on the H4, I don't have anything other than this area, which is still fresh. And I don't think it's gold. Anything can happen. But if price were to come back, it's currently still just an H4. If price were to come back, then I would definitely be looking for a long from that area. This little area here, I know it's small, but that's the area. I'm going to move this around. And you can see how nicely the market has been moving. Actually, if it breaks this, there is even another one below it, which is this quasi, which will be, I will start then building my case for that order block below, right? It's not just reaching, it has to do multiple things on, multiple time frames, all of them telling me that it's trying to reverse, and then I get in, and hopefully it does actually reverse, and I'm in the trade. Right, that's on gold. Hopefully that's helpful for whoever requested gold to be checked. Atish Rocade asking about leverage. Why should we we must understand and respect leverage? Well, leverage, as you all know, allows you to take a much bigger position than only your balance allows you to take. And that's what makes Forex, because the changes in Forex are very, very small. As you can see on my screen, EU has moved 0.17% today. So even if you caught the whole move so far in EU, it's only 0.17, sometimes it's 0.4, but that's already kind of a lot, right? So in order to capture these minute movements, you need leverage. There is no other way to do it. But leverage comes, it amplifies everything. It doesn't amplify anything in your favor. It amplifies everything. So it's a matter of basically, it's leverage means you're able to trade a bigger a position, as if you're able to trade as if you have a bigger account, meaning your winners will be bigger and your losses will be equally bigger. So, and that's where the winners isn't the problem. It's the losers that are gonna, if you don't manage them, are going to cost you the account. So that's the whole reason why leverage is good. If you don't have enough of it, then more is good. But a certain moment, it does not make sense. It doesn't matter how much more leverage you have, right? If you have 1-to-1, obviously for most people, that's going to be not enough. But once you get to 30, 50, you're already plenty of leverage. I think even 10 is enough for most people. We get to 20, 30, it's for just about everyone. There's on a 1 to 100 account, tell me, how many times do you actually go using all that leverage? Almost never. I mean, in a responsible way. You can always do that, but using responsible risk management, when do you use 100% of that leverage that gives you that margin? Never. So a certain moment it's irrelevant whether you have 1 to 500, even 1 to 1,000. It does not really matter, because your risk limits will not allow you to trade bigger. And but you still need to understand that just the fact that you're able to open a trade does not mean you should. All right, that's Raul Sharma is long on EU, and it hit TP. Congratulations, Raul. Congratulations to you. Great. Just being silly with the sound effect, although I mean it. Obviously, I truly mean it. Raul, I'm happy for you. Let's see. Is it Jonatan again? All right, so let's check here. What do we have? Remember, everyone, hit the like button if you haven't done so. And if you already have, it wouldn't be bad if you open another browser on another device and, show some love for our stream. Okay, so let's check on EU. EU has been moving quite nicely. Let me check the account. In somewhat of a profit. It's maybe I can show you guys the account. Let me see. I know our audience, they love to see accounts. So let me check if I can do that again, just for you guys. It's not that I want to show anything. It's because of popular demand. You guys, they always ask us. They want to see real trades. They want to see actual trades that we take. And even though I'm a bit private, to be honest, with all the details of my trades, these are my trades, and they're not exactly the trades that I took on all the rest of my accounts, but this one is one of the these are the trades that I typically take, right? And that's why we show you, right? So that's it. The EU is moving nicely in favor. Let's take a look, see how it hugs that EMA. I don't use EMAs anymore in my strategy, but I still have them on my chart to give me some sense of price action when I'm glancing at it. Okay, so that's the areas, and let's see. All right, so let me switch back to the other, and by other I mean trading view. There. All right. So let's take a look at gold. Not gold. Gold we just looked at. I mean EU. Why did I take the long on EU? You might ask yourself. Because the market has been going, has a negative or a bearish market structure. Would you agree, right? It has been going, market structure is bearish, so I wouldn't blame you for taking a short or thinking you should be going short, because if you look at that from this moment, market has been making lower lows and lower highs. I don't deny that. It is in a bearish trend from this point here. And actually, you can even say from this point, it's been making lower lows and lower highs. So it makes a lot of sense to be bearish on market on EU. However, let's see. We have I have some allergies, as you can see. These things that happens when you're live. I can't avoid them. There's no rewind, there's no cut, no edit. Comes out raw and as it is, right, with or without allergies. Okay, so what we have on EU is the following. I think I'm gonna do it from this area. All right. Okay. So I'm going to show you the reason why I took that trade, and if let's do the breakdown. Very, very logical top-down analysis from the monthly. What we have here. All right. So if you have any questions, let me know in the chat. Don't be shy. Don't think um, don't be shy about you're not interrupting. If you if I'm talking, you type. It's totally perfect to do that. All right. So you have a quite large on the higher time frame, quite large quasi. This being the head, left shoulder, the neckline, breaks it, forms the first right shoulder, which also forms with a quasi, breaks it again, and is now coming back to a structure, this structure, right? Which is a entry order block on this quasi, but because this one is bigger, this is the biggest one, is the one you want to be using. So you have two areas. Sadly, one of them is very wide, so not very useful, but this one isn't. And the fact that we had a reaction is completely accordance to expectations from these structures, right? That's what they make price do, react on them when we get them. And but we can see by the close of that candle that it did not negate the previous one. That tells us that this was the reaction, and apparently it's over, meaning that we are sooner or later we're going to be getting buyers coming back to the market and pushing price and perhaps testing this one again. Those are just scenarios, right? Running assumptions. No, they're not predictions, right? Okay, so that's one thing. The other thing is since we hit that monthly structure right here, we came back and created one bullish order block, which was not invalidated, but wasn't exactly respected either. Look at that big wick. That's why I don't have it marked anymore, because to me that wasn't or isn't anymore the relevant structure that market participant will be looking at. They're going to be looking at the area that actually made price the one most far away that made price react, and that's, to me, that's this order block behind us, which was still fresh by the time price got to it, and that's my explanation why we created this wick, meaning that slowly but surely we can expect from this wick price to try to continue its path upwards. That's the weekly. What else do we see? There are some incoming bearishness coming to selling pressure coming to the market in the form of this order block, which has already been retested once, and another bigger, wider order block, which is we are currently retesting, right? So even though I can perfectly see price continuing based on this order block, this weekly, to go lower into this area again, perhaps even break it and go to the next, I can see that totally happening. But that does not take away the fact that we are coming from a weekly order block, and we are in a quite bullish market structure in this time frame, meaning it's not at all completely unreasonable to expect that we're getting ready to continue with that move, to retest that monthly structure and possibly go even higher, right? So that's my the idea behind on the higher time frame, that this could already be in that order flow, or that sequence of events, or script, if you will, right, in terms of how it is moving. And we're currently looking at that. retesting this weekly. So if we do get reason on the lower time frame to go short, then we can pair that with the weekly structure and target the next weekly, which one we have below us. But currently, that's not showing on the lower time frame. If you go to the daily, you will see what I mean, right? I would be interested from this area, that area. Why? Because of the quasi we have. Right? You have this quasi. It's much bigger, but this is the the simplest, the shortest structure. It breaks the neckline and it comes back. So if I'm going to be shorting, I want to be shorting it from that level. And because it hasn't reached it yet, I'm it fits, or it is reasonable to expect that it's still going to reach it at some point in the near future, and that supports the idea that maybe this fresh order block is not the structure that's going to reverse price. Right? It's just one order block, while the quasi is actually based on a whole set of candles, not just two that created this order block. So to me, the quasi is much more significant, and that's why I want to be shorting it from this structure. That does not mean that if I do get a daily reason to get long, and I do have that to get short, I mean from this area, and I have alignment on the H4, H2, etc., I will still take it because it's valid. I should be taking all valid trades. But I understand that the likelihood that succeeding is not as great if it were to be from the structure which is supported by an actual quasi on the same daily time frame. Okay, so that's one thing. The other is that's why I'm looking for, I think that or it's admissible for me to take a short. Let's and the other thing is that we have structures being created, and right now we are retesting a daily order block, but it's not a daily structure, and you can see why. Those people who have been watching us, watching myself for longer, will know that I consider this to be a second retest. Okay, so I am targeting this area, but not because this is a daily structure which is being retested on the first attempt, which is the only valid reason for me to use this daily. It is now, to me, it is retesting it on the second time, right? This is the first, that's the second. But because we have this entry order block on the daily, and we do have a order block that is relatively fresh, although it's not valid for me to base the signal only on this, I understand that the likelihood of price going to that area is quite high enough for me to target it in any case. Okay, that's one thing. The other is, let's see if I can point it out. The other one is the following. If you go to the lower time frame and zoom in, what do you see here? Do you guys see anything in particular? Let's see if you guys are paying attention. Right, we have one bullish. You can take it from here. Does not really matter. To me, that's the neckline making lower lows and lower highs. Established downtrend, breaks the neckline, which is right here. And what does it do next? It comes back to a relevant structure, right? This is the H4. So the relevant structure is this. That's the relevant structure. See that? And that's why the long right there comes back to that order block and has that reaction. That's exactly what I want to be seeing. And that's the basis of this day trade, which has the possibility of becoming an overnight and perhaps even a little bit of a longer trade. But that's the basis of the trade. The H4 quasi, the H2, we have it wasn't the H1 right here, you have, as we reach this H4 order block, we had a very beautiful reaction to this right there. That's the reason. That's the whole reason behind the trade. You have H4, quasi, fresh order block on the H1, and price comes. Where does it come back? Right there. And if you go to lower time frames, you will see almost the structures that I created, and you can see this is what I mean. Price comes back, and it left a bullish entry order block. It's coming back to the entry order block on the quasi, and which also falls overlaps with the H1 fresh order block it created, and that's all it needed to get in and move out. And as it's moving out, you can get more entries, and that's exactly what I did, right? So as it is moving out, it does this, there, comes back to that order block, you can get another entry, and it continues. You could, if you have, depending on your method of entry, you could get in again and again as it is moving away from the source of the reversal, which is the H4. So that's the idea. I hope it's helpful. If it's not clear to you, just let us know in the chat and we can perhaps discuss it. Checking in the background what I'm doing. I have actually two trades on EU on another account, not the one that I show you guys, and they are doing right now 8R in total, so 4 on average each, which is average for a little low, actually below average for a day trade. But the day is still young, and the move is still is still being developed. We only have 51 pips on the range today. That can still expand into, it's FOMC, so we can still expand to way beyond 100% perhaps during the day. And that's another reason why I have this target much higher than you would expect, because this is the next structure, right? The daily. Normally, I would just target that. But because of the FOMC, because of what I just mentioned, the quasi on the daily, it makes sense to have a little bit of a more ambitious target. So let's check the chat, see how you guys are doing. Let's see how that is. Thank you, Stephen. Remember, today again, we will have a workshop in the Discord community. You're all invited. The 5ers is very generous. You're all invited to the party to come hang out and have some fun, having a chance of winning 10 hub credits in the process. Yes, we raffle 10 hub credits for one person, sometimes more than one. But what's even way more important, I think, than hub credits, which is nice, but what is much more important is to interact with other traders, right? It's a much smaller group. It's not hundreds of members at the same time. It's a somewhat smaller group, but still quite large, and we have some very relevant discussion. And we discuss anything that could help your trading career. That's the whole idea, and we do it together. We share our experiences. All the members do. I do too. And that it's a great network of support, right, for social interaction, learning as well from each other, what others are doing, how others have dealt with their issues in trading, as well as building new friendship with people that love the same thing you do. So by all means, you are all invited to our Discord community and to our workshop we hold on weekdays. And today it's my turn. I will be hosting one later on, 45 minutes after we finish on this one. And how to get in. Many times when I talk about the Discord community, I'm asked how to get to the Discord, how to get access. It is through the hub, right? So the dashboard in the The5ers, to the left lower corner, there is a button. I think it was before an icon. Now it's a button that you can click, and that will give you answers. But that means that you need to have an account with the The5ers. And the smallest account is $39, which is the 5,000 5K high stake account. That's enough. You don't have to get a big account necessarily. Smallest account will do, and the Discord comes free with any account you buy. So you will have access to our beautiful community filled with positive members who are generous about their trading style and helpful for others. I know that because I've been a member since a long time, way before I was streaming, and that's actually how I was recruited. All right, so okay, let's one entry. Well, it depends. You mean the Discord community? It's the hub credits, the price we give away. Normally it's one, yes, but it has been the case. Sometimes we give out three times, three, or I mean two, and even three has happened, and most definitely will happen again in sometime in the future. But it's usually just one. But I think um, I think the value of these sessions are way is not in the hub credits at all. I mean, sharing and receiving from others, knowledge, experience, and sometimes even bits and pieces of their strategies that you could then assess and test and try out for yourself is worth way more than 10 hub credits for sure. Totally. So is the case. Yes, Race do knows this fact that it is the discussions and the debate we have and the topic we discuss are you know hands down much more valuable than 10 hub credits. All right, so let's take a look at what other pairs do you guys want me to check. There was one person who said the Aussie dollar. Let's take a look at that. I don't remember who it is. Kim knows about that, right? Kim is another one of the. We have a whole lot members, a great number of members who are regular to our Discord community, and they can vouch for us that these sessions are very valuable. I enjoy them a lot, by the way. That's a lot. Okay, so let's take a look at the Aussie dollar. We have on the higher time frames. I keep having these messages we have from the Discord community, right? I leave them on the chart so we can discuss them on the following. Sometimes I don't get to discuss all of them at once, and they are still for future reference. Okay, so we have the monthly time frame. The monthly has left us with a huge order block on the monthly, which is not very useful. The wider the structure is, the less useful it becomes. Okay, but it is still it's helpful knowing that there is a structure there, and um, but you need the wider it is, the less precise you should, and so the more margin you should, not margin as a balance, but I mean margin for error you should account for when you're taking the trade. What I mean by that is that there is a huge area here, but you still want to have something, let's say a fresher or something in the present to take your trade from. This is the monthly, of course, so you probably will not be, but this would be a great area to take you want to have multiple reasons because of the width of how wide this structure is. You want to have multiple reasons on even on the same time frame to take the trade. So we do have a bullish order block right here. It was very ugly retested, and it did hold in the end. But this would have been, totally stopped me out if I was in this trade. Even if it was on the 1 hour, probably would have stopped me out. But definitely on the monthly. But you can see that the market is getting bullish buying coming in. Of course, the structure is quite wide, so you have to take it with a grain of salt. But it is what it is, right? You have a fresh order block, and actually, let's mark it on the monthly. The latest one is this, so that's where I'm going to be looking, right? So this, it has already been retested and is no longer the relevant structure. This is the relevant structure to me, and that's where I want to be taking the long signal on the monthly, right? And currently, last month, we created a bearish structure. Okay, so we understand that sellers came back before the actual structure, meaning it's quite weak in that sense. Up here, even though this is an outside bar, that's a very bullish sign, but that only held for so much. At this place, we can see that the market already left that bullish momentum, lost it, I mean. So we have that. Let's take a look on the weekly. What do we have on? Let's take a look at the weekly. Yes, so this is the quasi. There is an actual weekly quasi. Yes, a weekly quasi. Right, that's the established downtrend, breaks the neckline, and there is one big area, again, very wide, for an area. It's basically 50% of the whole quasi, which is not good, but you can still use it, right? You can still use it. You just have to look for extra confirmation, extra confluence for your trade. So that's the weekly entry order block. Let's take a look. Yes. So we want to be looking a short from here, but from current levels, let's see if we can find something. All right. So I do see this low, this open 65.6, and yeah. So this isn't a quasi to me. No, it isn't. This could be, and in that sense, that still makes this, yes, it still makes it a quasi in this case. I would then be using this as the levels, right? Making higher highs, higher lows, breaking it, and looking for that reversal. We have 3 areas, 1, 2, 3. This is for the opposite direction, right? The sell into the monthly bullish structure. We have a sell structure as well. And we have, you can very clearly see how the market reacts to this structure. Look at these wicks, right? That's not coincidence. Reacts to them, but eventually breaks them and then reacts to the second one. Look at all these wicks, no bodies, just wicks, and then reacts once, twice, and then off we go. So there's a lot of reaction coming from this weekly. That's something you want to be looking at. Let's mark this as weekly structure as well. Quite tight structures on both sides. Okay. So this is the last structure. This one has been already invalidated. That's the structure that we're talking about. And let's see. Okay, so we understand that. And it creates, this is the last bearish one, fresh one that was created. That's where we're coming from. Right? So if we were to go lower time frames, this is for the sell side, the sell scenario. The daily did not offer us an entry. There is a bearish quasi. Let's update that. A bearish quasi. Okay, but no entry. No entry at all. And the quasi that I mean is this, of course. That's the quasi. Breaks it, comes back, but there's nothing in the quasi to, no trade to be taken. Okay, so let's see. So there's nothing there except that, yeah, there isn't anything. I wouldn't be able to, this is the daily, and I wouldn't be able to find anything other, perhaps on the H4, but even then, it wouldn't trigger me. Okay, so basically on the quasi, on the reversal on this weekly entry order block, I wouldn't be able to get in. What does that tell us? Well, nothing really, just that I wouldn't be triggered in. Let's look at an intraday trade, so a day trade. Do we have reasons? This is not fresh. There is an order block there, but it's not fresh, so I can't use that. Right? Price might react to it, but I'm not going to use it. And do we have something here? Nothing there. Last one was this order block, which is also not part of a quasi or. There's one thing though, if we were to take this low, then this would become a entry order block on the daily. But that hasn't happened yet, so keep that in mind. So if it does happen, then I will not be taking this trade short from there. But it will have to come, we'll have to take that line before we are able to do that, right? So that would be for a second right shoulder, right? The first right shoulder already has been created, and that will be a second one that I would be taking then from. I would take it from this daily structure. There isn't a daily setup in here, and all of this from the left is not something I want to be trading. They're just remnants from, previous price action, and all of this is of course just future and unknown to us right now. So let's take a look. This looks quite weak in all honesty. And I think, this is going to actually just break through this order block. That's just an opinion. It's not based on anything specific. Let's take a look. There is, let's take a look. If we have perhaps a reversal pattern, but there's no daily here. The daily isn't. There is a daily order block, but it's not part of a quasi and not fresh. So, to me, it's a weak one. It's an inferior one that I do not want to be trading. I do not want to trade. I mean, get 1, 2, and 3. Yeah, I wouldn't be taking that. So this quasi is out of the question. That leaves me with actually only this one. Let's see. The opened 43.8 and the close here is 43.9. That's yeah, I could definitely take this, but not because of the quasi, which is to me not because of the daily order block, but just because of the fact that this is an H4. Let's look at if we can catch something that has. Let's see if we can build a case for a little pop here on the H4, right? And we take that as a day trade, I mean. H2. David G trying to catch the secret word. Good luck, my friend. I hope you're able to. And if everything fails, my best advice is to come again and check with us from earlier, from the beginning till the end, so you can catch all of them and be part of have a chance at one of these prizes. All right, so we do have a fresh order block right there. The momentum is quite bearish. So whatever reaction, whatever pop you have from this area, don't be a hero. Just take first trouble area on a very sensitive, right? Don't try to extend this too long, because it probably will, if it even reverses, because it looks like it's not going to reverse, looks very, very weak. No hay problema, David. All right. On the that was on the 4 hour. We do have a bullish order block. On the H2, there is actually a nice area here. You guys see that? Ooh, I wouldn't mind taking this trade at the current levels. It has a very low win rate, but I would definitely be able to take that right here. Let's go to the lower time frames. Maybe we can take a trade. Ooh, it seems like it's already on the 5-minute. It's already invalidated the structure. Nope, this looks like it's gonna just keep on going lower. Let's see. We do have a quasi here, but it looks very, very weak. You don't have to be a super trader to see that this is very, very weak on the 5-minute, and there isn't anything below that. Is that? Yeah, there isn't anything else. So that leaves us with really nothing to trade. The three. Yeah, if it closes like here, that's all. There's nothing to do. Right? That's the importance of waiting for your signal, for your confirmation. Right? Don't trade these structures just because there's always going to be structures, right? Well, not always. A lot of the times you will find these areas where market has some chance of reacting, but it doesn't mean it's going to react all the time. So otherwise you would not have breakouts, right? And breakdowns. Break out and breakdowns happen when these structures break. So just the fact that you do have breakouts and breakdowns is the evidence that reversal patterns do not always work. But they give you some good indication where you can enter to get the best. If it's going to reverse, you're getting in at a place that makes sense, and that is already a huge thing. There is a 15-minute quasi. I don't trade those, but I wouldn't mind taking a long from here on the 50-minute. The lower time frame is already clear that it's not going to hold, but if the 50-minute still reacts, I can totally see this have a reversal, and there's also that possibility of price just going for that liquidity that there is below this area, right? That liquidity that's right here, waiting for price to come in, and we can see if it reacts with a lot of momentum, like so, then you can get in still on that move going up. All right, we're getting to the wait for confirmation. Yes. We have to on the 5-minute, and on the a 5-minute is already gone clearly. On the 3-minute as well. So basically, there's nothing left, right? There's nothing left here. So this structure is gone on the 5 and on all those time frames, but the 15-minute isn't gone yet, right? You do have this area, which is the order block, which we can still have a reaction from. Okay. The quasi obviously is not here, but here, across the neckline. And so you can still, yes, this is a valid entry to me. It's basically this. And that's the neckline, comes back to the structure and then possibly moves out. This big move, though, you got to be very careful. And, look at this candle. Look at this huge candle in comparison to the rest. So it tells you that the sellers are very much driving price lower. And but if you get a reaction here, it can be a good trade, especially if you're tight on the entry. You can go to low time frames and look for reactions. I don't see anything yet. It looks weak as can be, and it looks like it's just going to continue lower and not reverse at all. But hey, anything can happen. So, all right, we have 30 seconds to the hour. I would like to thank everyone for your attention, for the great moment we just had together, those 2 hours. Invite you as well to our Discord session in about 45 minutes, where we will be in a very relaxed environment mode and talking about just about anything around trading, and having a good time most of all. And wishing you all good luck with those secret words. I hope you all found it. I am not able to help you, anyway, even if I wanted to. Thank you, Victor. Thank you. See you guys tomorrow again. I hope you guys liked the the chart all the time, because that's this is the best job in the world. You get to talk about the things you do all the time. You enjoy. It doesn't feel like you're it doesn't feel like something you have to do. It's something I'm doing anyways, and I'm enjoying it. I mean, sharing that passion and enjoying it with you is one of the greatest thing about doing these streams. All right, so have a great day, and we'll be together again on Thursday. Yes, and I hope you have a great. Remember, this FOMC minutes release later on today in about 4 hours from now. Make sure you do, you know, you're aware of that, and you calculate that in your, risk assessment for today. Wait for those confirmations. It's better to miss a trade than to get in one that is not according to your plan. And that's it. That's it for on my side. See you guys soon. And David, uh, hasta la vista. All right. See you guys, all of you, again soon. Bye bye.